Hello everyone, welcome to Financial Reporting Marathon session for March 2026 attempt. This is Kauvya Ravichandran, one of the ACCA faculties, and my expertise is financial reporting. Let me tell you what exactly we're going to learn in this marathon session. The whole marathon session is all about the conceptual revision of all of the topics that you will be learning in financial reporting and prioritizing what has to be revised first and what has to be revised at the end, and by linking the topics from one another. This is what we are mainly going to concentrate. So we're going to complete all of the standards, which is very important in your financial reporting for your examination. A full conceptual revision will be done here, right? So without any delay, let's get into the session. Let's first understand how are we going to group the standards first. Like if I'm going to study, how I'm going to study. That's what I'm going to teach you guys today. So I will start with the concept. Always the financial reporting topic was always started from a topic called conceptual framework. So this is what the very first topic that all of us would have learned, which we call it as conceptual framework, which plays a very basic role for all of our topics that we will be learning in upcoming sessions. So what exactly in conceptual framework, if we would have learned, if you guys can all remember. So we did learn about the need for conceptual framework, or if I have to talk about the summary that we would have learned in this particular overall topic, was starting with what are the principle versus rule based, or the general purpose of the conceptual framework, or what are the qualitative characteristics, which are the fundamental qualitative characteristics. This is what we would have learned. So as far as I remember, like conceptual framework, mainly you need to understand the users. In conceptual framework, I can divide few things, starting from users of financial information. If you guys know, these are all the people who plays an important role for us to understand why are we even preparing financial statements. So I have multiple users. The users could be multiple people, like they could be investors, advisors, employers and their representatives, like lenders, suppliers and other trade payables, customers, and government and their agencies, like public people, right? So they all need our information. Why do they need information? Maybe investors wants to go for return and risk, like they want to know how much is the risk in this particular shares or this company, or what is the return that I can expect to have. Can I buy, hold, or sell this particular investment, or will they be able to make payment? Likewise, each user have their own way of analyzing the company. For that, we need to know who are the users of our financial statements. So are the users, like it could be investors and their advisors, employees and their representatives, whoever it is. So typically these are the people who are going to use the financial statements that we are preparing. So that is the reason the financial statement has to be very qualitative in nature. When I say very qualitative, so this qualitative has certain characteristics. So that makes, when I say the qualitative, to say it is quality information, there are certain characteristics which we divide into two different characteristics. One, we call it as primary, or we can also call it as fundamental. Another one, we call it as what? We call it as enhancing. One we call it as primary, another one we call it as enhancing. Primary or fundamental, otherwise enhancing. What is primary? We have two qualitative characteristics of financial information we have here. One, the information has to be relevant in nature. Second, it should have faithful representation. Now, what is relevance? I mean to say the information has to be material enough to be relevant. This links us to understand what is a materiality concept is. What is materiality, or what is material? See, I can say I need to know today's FR marathon session is very important for you to make your decision in terms of revising the topics. So today's marathon session is important for you right now, but once you write the examination, maybe it is not important to you. So it is material in that point of time where it is used in decision making process. If it is not used in the decision making process, then I don't say it is material. So information has to be relevant in nature. That means it has to be material in nature, where it could be used in the process of decision making. Then comes faithful representation, where I'm going to talk about faithful representation is neutral. The information has to be neutral and it should be free from errors. neutral, free from errors, and it has to be unbiased, or I would say it has to follow a concept called prudence concept, where prudence and substance over form, these are all the two forms that we have to look into in faithful representation. The information has to be neutral, free from errors, unbiased, and complete in nature. That means you can't have an information which is only concentrating certain group of investors or certain group of users. For example, I want to build my business, like I want to raise more capital in the upcoming year, so I am only concentrated more on profit, return on capital employed, something which is elevating all of this. That is completely not right. You have to be neutral. So let's say you want to raise more money from the bank, and you are most likely concentrated about you reducing the finance cost, or you making more payments of finance cost, or showing a very relevant information only to the bank lenders, then we don't say it as neutral. And the information should either be completely free from errors, and that error is, I'm not saying that you have to be 100% perfect, material errors should not be there. And the information has to be complete, factually right. So this plays, like faithful representation plays an important role, saying that information should provide true and fair view. What is true and fair view? Factually right and fairly presented. True is factually right, fairly presented is what faithful representation that we say. Like these are all the two major qualities for an information to be say, yes, this is the right information. This information is a quality information, right? Then comes we have enhancing. We have 4 different enhancing qualitative characteristics. I can say one is comparability, timeliness, another one is verifiability, and last but not least, understandability. Right, and information has to be comparable in nature. So I should be able to have my relevant standards to be followed, and those standards should help us in comparing the information maybe with the organization to organization, or my own organization with 2 different years, or maybe like my internal standards, whatsoever I have as a standard, if I need to compare. So if I have the right principles, accounting principles has been followed, or a consistent accounting principles have been followed from very long time, we say it is comparable in nature. And similarly, the information has to be available to the users on a right time. Let's say the financial statements are prepared on 31st of October, when the year ending is 31st December or 31st March. Like most of the other organization has released and published their information, where many of them has already made decision, and you are just giving your information very late. Maybe it is not timely enough to help the investor to make a decision or help the user to make a decision. And then it has to be verifiable in nature. So verifiable in the sense, you and me, we can't go to an organization to make anything verifiable in nature. But when I say verifiability, there are 2 types of verifiability that you can expect to have. One is physical verifiability, another one is logical verifiability. Physical is, let's say I go check the bank account cash. Cash in bank account is $10,000, and I see the verify, I can, in the books of accounts it's also $10,000. I can physically go, I'm going and checking. That is verifiability, physical verifiability. But logical is we using methods, using formulas, using analytical procedures. We say, yes, this should be the inventory, but the inventory is XYZ value, and you make a logical understanding behind it. That is also another type of verifiability. And finally, information has to be understandable. A lot of us get confused when I say understandable. It is not you eliminate or you omit the information which is not, which is very complex. But what you do, you make the information simple. Whatever is complex, you present it simple in nature, that any basic financial knowledge holder should able to understand whatever you have presented in your financial statements. So this is what the qualitative characteristics of financial statements, which is very important. I've always seen one question coming in your financial reporting examination on this part. So uses of financial statements, qualitative characteristics of the financial statements, and then see, I've been telling financial information from very long time. What is this financial information? See, financial information is presented in three parts. Financial information is presented in 3 parts. One, we call it as financial performance. Another one we call it as financial position. And the last one we call it as changes in financial position. Yeah. So what is financial position? Which talks about economic resources and claims. When I say economic resource, I'm talking about assets. Economic resources are treated as assets and claims are called as liabilities. One is treated as assets, another one is treated as what? Another one is treated as liabilities. Assets and liabilities. And it shows the financial structure, like how you have brought the business values, like how much is your equity value, how much is your capital value, right? And like your liquidity and solvency, and the capacity to adapt the changes. Like what exactly financial position is, I would say balance sheet in simple terms, if we don't have to understand so much. This is nothing but balance sheet, right? So I prepare this, which talks about what? Assets, liabilities, and equity of the organization. Then I also prepare financial performance, which is presented in the name called Statement of P&L and Other Comprehensive Income, which purely talks about what are the revenue or operational activities that is happening from my organization point of view. So what are the objectives that I can expect to have will be considered as what? Will be considered as my statement of P&L and other comprehensive income, right? Then finally, agar kuch changes, like any changes is happening in my financial position, increase in assets or decrease in liabilities will result in some cash inflow or outflow, will be presented in another statement called statement of cash flows. Any which ways, in single entity statements, you guys do prepare P&L, financial position, right? And cash flow is one of your topic. But however, this is what basic conceptual framework is. I have certain users. For that users, I have to present financial information. What information? My position and my performance, and what, because of changes in my position, what happened to my cash flow. Plus, I have to present it to the users. When I present it, it should have certain quality so that the user can make a decision, and that qualitative characteristics are primary and enhancing, which is relevant and faithful representation, comparability, understandability, timeliness, and verifiability. So once I understand this, now we need to understand, ma'am, what is conceptual framework then? See, we have to give an information which is qualitative enough to the users of financial information. For that, we need a process. That process of presenting financial information, we call it as what? That process of presenting financial information to the users, we call it as accounts. So to prepare this accounts or accounting, I follow a concept called principle based accounting. Ma'am, what is principle based accounting? See, when I say the word principle based accounting, all of us think that, like we have to follow certain rules. No, guys, principle and rule has two different understanding. See, principle is about professional judgment based on the past experiences. How do you know that you have to respect the elders? Because of the past practices and the principles and values and conventions which is being told by our elders to us, saying that we have to value and respect the elders, right? So this is principle which is taught to us at home. Likewise, to prepare your financial statement, there are certain principles or the concepts that you need to know so that you make a professional judgment. So why do we need principle based accounting? It is purely for a professional judgment to be done in a situations where you can't help. But what is rule based accounting? Rule based accounting is like, see, if you go without a helmet, if you ride a bike without helmet, the police will catch hold of you and they will say pay fine. There is no way to get out of that place apart from paying fine, because it is a rule. Traffic ke liye we say rules. We never say traffic principles. But let's say if you guys are going to your college or your office, they have a dress code, and one day because of a minor injury you have not followed the dress code, they will not throw you out of the college or they will not throw you out of the office. Why? Because they know an injured person might not be able to wear or maintain the decorum. That is principles. It is not rules. right? Yeah, where the people will search on the right situation. Okay, in this situation, is it right or wrong? That is principle based. But traffic rules is rule based. Like for example, taxation is rule based. Yeah, just because I am earning, like let's say I am earning 12 lakh per year and you're also earning 12 lakh per year and you're spending more, I'm spending less. If I go tell IT department saying that I'm spending less, she's spending more, I will pay more tax and she or he will not pay more tax, the tax department will not be okay about it. They'll say like everybody is same and you have to pay. Correct. So that is rule based. So principle based professional judgment I have to make. For that you need to learn you need to understand certain concepts. What are the concepts that you need to know? The very first concept that you know is legal entity concept. Now what is this legal entity concept? The legal entity concept is like you need to know the business is completely different from a individual. A company or a business is an artificial person under the eyes of the law. So a company can get into contract, a company can sign a MOU with somebody, a company can file a case against another person, or somebody else can file a case against company. We call it as simply legal entity concept. You should know there is another concept called accrual and matching concept. Now what is accrual and matching concept? It works hand in hand. See, if I tell you a matching concept, for example, I'll take an example for you guys. So let's say I have 100 pens. I purchased for $10 each. It will cost me $1,000. This is my total purchases. And I sold 800 pens for $15 each. So I made, sorry, not 800, my bad. It's 80 pens into $15 each. So I made a sales of 1,200. You can't say profit is 200. No, it's wrong. I'll write it on the left side. You can't say the profit is 200. It's not 200. Why? Because I will not recognize expenses which I have never incurred a income on it. How many pens I sold? I sold 80 pens. My expenses is not going to be 1,000 for that, 1,200. Rather, I sold 80 pen. Each pen has a profit of 5 rupees. 80 into 5. I made a profit of 400. So that's the reason I consider the unsold goods of how much? Unsold goods of 200 extra. So that we call it as what? We call it as matching concept. My expenses should be matched. All my income should be matched with those expenses which is incurred to generate that income. Otherwise, I will not consider. This we call it as what? Matching concept. Similarly, you should also know what is accrual concept. Accrual concept talks about recognize expenses only when it is earned. Sorry, expenses when it is incurred, not when it is paid. It doesn't matter to me. Similarly, recognize income when it is earned, not when it is paid or received. So cash inflow or outflow doesn't matter to me. All it matters is, have I incurred that amount? Let's say I stayed in a place, a rental place, and I paid rent for it. Doesn't matter. Did you use that? Like, did you stay in that place? Did you use that in the business? That's what matters. I was not there at all. Yeah, but I still paid. You have not incurred it. Right? December month, you've not paid the rent, but still December month you have done the operations in that premises. That is still your expenses, even you have not paid. January month, you have gone ahead and paid already. Even though you have paid, you have not gone to Jan yet. You can't read Jan expenses for the previous year. Same goes with income. Somebody paid you amount, but you have to check, have you earned it? Did you provide the service? Then it is my income. You have not provided services, people have paid or not paid, doesn't matter, it is not my income. You gave the services, people have not paid, still recognize income and recognize revenue. These two are very, very important. Accrual concept, matching concept, yeah, materiality, as I said, information is very relevant if you have to make a decision. Correct, yeah. Likewise, we have many concepts which we will be seeing as and when we move forward in each and every standard. So basically, what is conceptual framework? It is a set of theoretical principles which is used in the process of what? Preparation of your financial statements, or it is used in the preparation of what? Financial reporting process. So first we need to know this much. Once we know this much, now we need to understand, ma'am, you've been telling it's a concept, you've been telling it's a principle, you've been telling it is all. I understand. But ma'am, what about people start applying the way that they want? That is where comes we have standards. That is where we have somebody called IASB who have released standards for it. Yeah. Now what standards we call? We call this as IFRS standards. So IFRS standards can never override whom? Can never override the conceptual framework can never override the IFRS standards. So this is issued by IASB. So in financial reporting, you have a very strong certain IFRS standards that you should know, and it is very important for your FR syllabus. Now without running around the bush, let's get into what are all the standards that we have to study in our marathon session. We're gonna start with a group of standards which is related to assets alone. So if you need to know, first you need to know a very first standard called IFRS 13 fair value measurement. This is very important for you to know anything else in the future. The whole financial reporting ke liye you need to know how IFRS 13 fair value measurement works. So once you know IFRS 13 fair value measurement, there are multiple standards which is related to assets. Now an asset could be, I can say an asset could be of non-current asset could be of current asset could be of financial asset, non-financial asset, tangible asset, non-intangible asset. It could be of multiple types. So what are the standards we will be accommodating here? We will first learn something called IAS 16 property, plant and equipment. Then IAS 40 investment property. Then we will learn IAS 23 borrowing cost. Then we will learn IAS 38 intangibles. Then we will learn IAS 36 impairment. Then we will also learn IAS 20 common grants and IFRS 5 non-current asset held for sale. These are all the standards which is very, very important for us. So we shall start with the very first standard, IFRS 13 fair value measurement. So first of all, what is fair value? This is very important for us to understand what is fair value, because most of us, we don't understand what do you mean by fair value. So we need to understand the definition of fair value. So the definition of fair value is the price. It is the price that which to be sold today, to sell an asset or to transfer a liability in an orderly transaction, that is a fair transaction between market participants at the measurement date. Ma'am, what do you mean by this? Like in today, if I have to go ahead and sell, let's say today I might want to go ahead and sell this mobile phone. So if I want to sell this mobile phone, how much somebody is ready to pay for this phone is nothing but fair value. I have a loan in my bank account. Today, if I go settle a liability to the bank, how much are they ready to take money from me? That is my fair value of my liability. So now, I go sell this phone with my brother. Then it is not an orderly transaction. Why it is not an orderly transaction? Because the opposite person is known person. There is a chance where the value is not at fair. It should be between market participants. In an orderly transaction, that means in an arm's length transaction, that buyer and seller are fair and actively participating in the market. We call them as what? We call that as fair value measurement. So once we know what is fair value, we should know there are certain values that we need to understand. See, fair value can be easily found with the help of active market. Now, what is active market? Fair value can be found with the help of active market. What is an active market? A market in which a lot of transaction for a particular asset or liability take place with sufficient frequency and volume to provide pricing information on an ongoing basis, we call it as what? We call it as active market. Let me give you guys the definition. Yep, these are all the standards, as I said. Okay. So what is an active market, guys? Active market is that market where items are brought. I can say active market or that market where items are brought, okay, or bought and sold. Items are bought and sold frequently. What is frequently? Like on an average, a huge number of transactions, very frequency, so that prices are reliable and up to date. This we call it as what? This we call it as active market. Items are bought and sold frequently, so prices are reliable and up to date. We call it as what? We call it as active market. So now once you know there is an active market, you should understand, do we have a highest and best use? Do we have what? Do we have an highest and best use? So that means, see, once you understand an active market, understand what is principal market. Principal market is where the market with the greatest volume of activity is happening for an asset or liability, or I would say like a place where I get the most maximum fair value. We call it as most advantageous market. So once you find out the particular market, we need to understand that we have 3 valuation techniques to go ahead and find out the fair value. So what are the 3 valuation techniques that we can go ahead and find out? We call it as level 1 input, where we can go ahead and observe in the market, observable inputs in the market, to find out what's happening. For example, we call it as what? We call it as market approach. We do something called market approach, and we find out, very simple, it works to an identical product. It works to identical or comparable product. Let's say I go purchase an XYZ company. If I go purchase Reliance shares today, so all of them who purchase Reliance shares are identical in nature, where I can go find out the observable inputs. There are quoted price in the active market for that identical assets or liabilities, which the entity can access at a particular measurement date. We call it as level 1 input, or also called as what? Market approach. So we use prices and other irrelevant information generated by the market transactions involving an identical or comparable assets or liabilities, that is similar assets or liabilities. I will go find out, which we call it as level 1 input and also market approach. For example, quoted market price of any shares on a stock exchange market, we call it as what? We call it as level 1 input. Then we have level 2 inputs, which are observable. It is observable directly or indirectly. Inputs other than quoted price. It's observable, but other than quoted price. I call it as just other than quoted price. Yeah, which we call it as what? Which I typically call it as cost approach. The level 2 input is also called as what? Cost approach. Now, why do I use the word cost approach for it? See, when I say cost approach, it reflects the amount that would be required to replace the service capacity of an asset today. Maybe I call it as current replacement cost. I don't know, I can't find out the quoted price of this market. I can't find out an identical or similar mobile phone. what will I do? I will go purchase. If I purchase a similar phone, a brand new phone today, but if I use it after 5 years, how much it will cost me, how much it will be the value. Based on that, I'll find out a fair value. That we call it as cost approach and level 2 input. So if you don't have any kind of trading or quoted value, then you can go ahead and use this approach. For example, in one area you have a piece of land and nobody is purchasing it. It is very difficult for you to find out the fair value. What you can do is take a similar area, take a similar piece of land and say how much it is costing or how much it is getting sold there. You can fix that price to here, saying it is, we call it as cost approach. How much it will cost me to purchase a similar land or building or similar piece of land or similar asset at this point of time, how much it will cost me a similar one, an equivalent one, we call it as cost approach. That is level 2 input. And the last one is level 3, which is unobservable in nature. So level 3 inputs are unobservable. I mean, if I bring an old ambassador car, guys, tell me how much is the value for it. Maybe it is quite difficult because people are not buying and selling, or the replacement equivalent asset is also very difficult to find. These inputs are relevant when there is very minimal or no market activity for a particular asset or liability on the measurement date is there. At that point of time, I go use another approach, the last approach, we call it as income approach. We use income approach. That means I will go find out the present value of all future cash inflows associated with the asset or liability. Based on that, I call it as what? I call it as income approach. So I will go ahead and convert what? Future cash flows to a single current discounted amount, which I will find out what is the present value, or you can do option pricing model, which you guys will be learning in your AFM. So that way I can go find out the fair value. For example, if I can't, okay, fine, ambassador car nobody is ready to purchase, or I can't find out the equivalent cost, I'll simply do one thing. With this ambassador car, how many years and how much I can go ahead and earn, that amount I'll take and I'll discount it to the present value and say this is my fair value. Fair enough? These are all the 3 inputs that we have. Yeah. So these are all the 3 different methods that we have. This is typically about your IFRS 13 fair value measurement. Agar if you know this, then rest all is going to be easy. We can start with what? We can start with the very first standard, which is important for us to understand what is IAS 16 property, plant and equipment. As we're going to follow this. This is what we're going to follow. So for every standard, this is what we're going to follow. Okay. So every standard, we will have a process. Every standard, the first thing is recognition criteria. What is the recognition criteria for IAS 16 property, plant and equipment? Guys, it covers from a tangible non-current asset. It requires that the asset should be met with what? It should be met with the definition of an asset. So let's start with recognition criteria. So how does the recognition criteria works? An item is recognized as property, plant and equipment when two conditions are met. What are the two conditions are met? First, it is probable that future economic benefits should flow to the entity, and second, the cost of an asset can be measured reliably. If these conditions are not met, then the cost is not treated as an asset, rather it is treated as expenses. But you should also understand the recognition doesn't stop here. The recognition gets little extended till when the recognition gets little extended, it should also meet with the definition of what? It should also meet with the definition of property, plant and equipment. So when it meets with the definition of property, plant and equipment, we should all know that property, plant and equipment is that kind of asset which is held, and especially it's what kind of asset? It is a tangible asset, tangible non-current asset, and that should be held for the purpose of either production or supply of goods and services, production or supply of goods and services, and if not administrative purpose, otherwise it should be given out to rental to others. There is a hook in this rental to others part, which I will be teaching you guys when we go to the IAS 40. So once the definition of property, plant and equipment is satisfied, you can go use what? You can consider that as a IAS 16 property, plant and equipment. Once you recognize, then you need to know how do we initially measure. Guys, we initially measure the property, plant and equipment. Just remember these things. First, I will go recognize purchase price. The four components of initial measurement is purchase price. What is purchase price? The list price of the product, and I deduct trade discount but not settlement discount. I will go reduce trade discount, and I will go add all non-refundable tax, and if you have any refundable tax that you have paid, it's your job to go ahead and exclude refundable tax. This is very important on the purchase price. List price, you deduct trade discount if you got anything, and you add non-refundable tax, exclude refundable tax. Once you find out the purchase price, then the second one is directly attributable cost. What is directly attributable cost? Anything that is directly involved in the asset to be used. I mean, for example, installation cost. You can see here installation cost, delivery cost, testing cost. ISAB we call it as what? Directly attributable cost. All this we have to go ahead and capitalize. After that, this third component is IAS 23 borrowing cost. So if you borrow any kind of loan for a qualifying asset, any interest that you have paid can also be treated as what? Your initial measurement can be capitalized. And at last, you have something called decommissioning cost. What is decommissioning cost? Like if in case in the future, you might have to go ahead and if in case in the future, if you have to pay any kind of provision to the government or some cleanup cost to be incurred, this will be recognized as your initial measurement. So we will learn this in IAS 37 when we move forward. Yeah. So these are all the what? These are all the initial measurement of your IAS 16 property, plant and equipment. So then comes subsequent cost. What is subsequent cost? After we are done with the initial measurement, after that, if any kind of new cost comes, can I go ahead and consider that? Yes, you can go ahead and consider that. But however, any major replacements or inspection, we can go ahead and consider that as an asset. But if it is a day-to-day servicing, maintenance, repair, these things to be by default expense to statement of P&L account. Right? Then comes the subsequent measurement, that we call it as what? That we call it as measurement after recognition. So in subsequent measurement, what do we need to know? We have two methods that is very important for us to understand. One is cost method, another one is revaluation method. The first model we have is cost model. The second model we have is revaluation model. Now in cost model, we take historic cost, the original cost, and we reduce accumulated depreciation, and we reduce any impairment loss. But revaluation model may we take revalued amount and I reduce any accumulated depreciation and I reduce any impairment loss. This is the amount which goes to statement of financial position. So now what is cost model or what is revaluation model? For that you need to understand what is depreciation, because depreciation is common in both of the cases. So what is depreciation, guys? It is a systematic allocation of an asset over its useful life, because the depreciable amount is nothing but cost or revalued amount minus the residual value. So I mean, for example, I have an asset that is purchased for $10,000 and this is getting used in the business for 10 years. I will say I too can't consider the whole $10,000 in year 1, but I can split this $10,000 over its useful life. That we call it as what? That we call it as depreciation. So what are the methods of depreciation that we have, people? The methods of depreciation that we have is straight line method, written down value method, and then we have machine hour method. Straight line method, written down value method, then we have what? Then we have machine hour method. Okay, so now once we understand this part, the depreciation which will get split over what? Depreciation which will get split over the number of years. This depreciation will be treated as expenses and we pass a journal entry saying debit depreciation, credit what? Accumulated depreciation. We debit depreciation and we credit accumulated depreciation. This will be treated as expenses into your statement of P&L account, and this will go ahead and consider as what? A reduction in the value of the asset. Of an asset. Right, yeah. So once we understand depreciation, we reduce accumulated depreciation where we reduce the accumulated depreciation in your value of the asset. So we can either reduce through straight line method or written down value method or machine hour method. So once you find out the depreciation, you go reduce the accumulated depreciation. This typically will give you a concept called carrying amount. What is carrying amount? Original cost minus accumulated depreciation, or revalued amount minus accumulated depreciation. We call it as what? We call that as carrying amount. Okay, so we know that depreciation is something that is going to get reduced in your books of accounts or reduce the value of the asset. But what is this revaluation? Okay, see, very important, the topic is revaluation. See, under IAS 16 property, plant and equipment, we should all know what is revaluation. Okay. So what is revaluation, guys? Revaluation under IAS 16 means carrying property, plant and equipment at fair value instead of historical cost. I mean, I might have a building and that building is kept under cost, but it is better that the building is kept at a fair value, because the fair value is the more faithful representation of the building. Now under revaluation model, an asset is shown and at its fair value at the date of revaluation, and we reduce any accumulated depreciation and we reduce all the impairment loss. Now this fair value is based on market value, but we need to understand what happens if there is a revaluation increase or decrease. When the asset is revalued, there is a chance where the value might increase, there is a chance where the value might decrease also. So you guys should understand a flowchart that I'm going to write. So let's say first time revaluation, if you get a gain, First time revaluation, if you get a gain and loss. See, first time revaluation, it gets a gain. Please understand, it's a gain, I agree, but don't send it to statement of P&L. Please send it to other comprehensive income. Ma'am, what is this other comprehensive income? Guys, not all the income to be shown in statement of P&L, because this is not your hard work. This is just the building which got the value being increased because the surrounded facilities like infrastructure has been increased. It is not because you have put hard work, you have painted the building. No, it has happened because maybe the nearby metro station has come, or maybe because the new facility has been built, ITBT companies have been come. Like because of that, the value of the building increases, not because you go paint the building. No. So here it's your very important job is to divide the income that you generate because divide the income generated because that you put your hard work. Like operational activities, we treat it as profit, but this is something which is unoperational. It happened because of an outside element. We call it as other comprehensive income, which still goes to equity. So this goes to equity if it is a first time revaluation. But if it is a first time loss, it will not go other comprehensive income. It will go to statement of P&L because this is treated as impairment loss. Because what is impairment loss? If your carrying amount of the asset is greater than recoverable amount, I mean you can't recover your amount, what you say, what you think, we call it as what? We call that as impairment loss. It goes to statement of P&L as expenses if you do for the first time revaluation. Now, what if I do second time revaluation? Second time revaluation, or I would even use the word subsequent revaluation. Second time or subsequent revaluation should see, do we have other comprehensive, do we have OCI balance? I mean previously, did we ever find out any kind of other comprehensive income? Yes. No. Yeah, if it is yes, and then there is a revaluation surplus. Yeah, if it is yes, then there is a gain. Send it to other comprehensive income. No. Then there is yes, but you have a loss. Even still, then send it to other comprehensive income. No worries. Okay. But if you don't have previously any kind of OCI balance, I mean it was there or it was lost later, if you got any kind of gain, you can Sida send it to other comprehensive income. We don't have problem. But if you have any kind of loss, it should go to statement of P&L. Right? So you should understand, if you have a balance in OCI, if you get a loss, use it. Okay. If you don't have any kind of balance in OCI and if you get a loss, go ask P&L. Right? So if you have revaluation upwards, go check, send it to other comprehensive income. You're okay. But loss is there, check do you have balance or not. So it's very simple. What will I do? Let's say revaluation upward. $1,000. I'll go debit my asset. I'll go credit my other comprehensive income with 1,000. Fair enough. Then this is happening for the first time. And second time, there is a revaluation loss. The loss is 1,200. What will you do? You have only balance of 1,000 that you have gone ahead and credited back then. But it's your job to now go debit the whole 1,200, because this time my loss is just 1,000. It is more than 1,200. I go debit my OCI with 1,000, but extra amount I will go take it from statement of P&L 200. So if you don't have enough balance and you have more loss, you'll go take the amount from P&L and you'll go credit the overall asset with 1,200. This is second time. Let's assume now third time I got some gain. So if you got some third time gain, Let's assume that gain is some 700. Don't see the give to the OCI. First, guys, you have taken some help from statement of P&L. Give back to statement of P&L the 200. Then you will go ahead and credit the OCI of 500. This is how I do. Revaluation, upward and downward. Yeah. And what happens after revaluation? The depreciation is calculated based on the revalued amount. The depreciation is calculated based on what? Based on the revalued amount. We can read this for a minute while I drink water. Okay, so I'm gonna take all the doubts, guys. Okay, what is the fee? Okay. Hindi, I can talk. You guys can put the comment, like whatever the doubts, जो भी doubts है, you guys can paste it accordingly. I'll समझा दूंगी. Okay, and thank you. English में होगा. Okay, I'll send it, guys. Yes, so principal market is a type of active market. See, active market is a very big perspective, I would say. A principal market is that particular place where you can expect to have वही asset के लिए where you can expect to have a lot of transaction happening. Okay, so for example, you can take the whole industry. The whole India could be one active market. So in that respective places, like for example, the asset that I want to sell, and that asset will be traded much. We will call that as what? We will call that as principal market. Okay. And okay. Guys, any questions on the part? You can go ahead and post it. Once every standard is done, I shall go ahead and see all of your questions and I will be able to respond back. Yeah, okay. So now after the revaluation, what happens? After the revaluation, I will go ahead and consider the depreciation. I will go consider the depreciation. The depreciation after revaluation is purely based on the revalued amount with the remaining useful life. So now because of this, what happens? You understand. So I just told you that we follow something called matching concept. So I have an asset, $10,000 value का asset है, where estimated useful life था 10 years. Okay. So I revalue होने के बाद like it's $15,000 with the same estimated useful life of 10 years. What was your previous depreciation? Previous depreciation was $1,000. अभी after revaluation, your depreciation is 1,500. अभी क्या हो रहा है? Like you can see there is an excess depreciation of how much? Excess depreciation of $500. Now this $500, sometimes what happens, this asset value increase हुआ, right? The asset value increase हुआ. You're increasing the depreciation. It is fair enough when the economic benefits also increasing. For example, I will go ahead and say, अभी मेरे पास एक building है and that building is a value of, for example, $100,000 का value है and it is giving me economic benefits. मतलब I'm collecting rental or anything for that matter. I'm able to make an economic benefits of, let's assume, $15,000 a year. अभी revaluation होने के बाद the same asset has now become $150,000. ठीक है. See, guys, if it is a rental property, somewhere the value of the building increases because of the local facility increases and you will ask for more rental. Fair enough. There is no problem. Correct? I want more rental. Let's say now from now on I'm going to ask people to pay more rental of $20,000. I'll collect so much. Fair enough, no problem. You charge excess depreciation also. We don't have any problem. But what if I'm running a coaching institute and I tell the students like, building ka value bhi increase hua, facilities sab increase hua, abhi you go pay more money. You will say like, ma'am, you're gonna teach the same thing. No, building value can increase. There are some situations where the asset value increase hota hai but not the economic benefits. उस time क्या होता है, like your economic benefits stays the same but your depreciation is increased by $500 extra or whatever the extra depreciation that we have. उस time this excess depreciation के लिए you have an option to transfer back to retained earnings. Transfer back to retained earnings. इसका मतलब, I know this excess depreciation is purely because of revaluation surplus. You see how much is the revaluation surplus here? The revaluation surplus here is $5,000. Correct. So this revaluation surplus will be nothing but distributed among the remaining useful life. Every year, I will go divide. $500 will be transferred from where? From the revaluation surplus to retained earnings. And this is totally an option. It is totally a option. I mean, situation deke we can go ahead and do it. So that is what we call it as what? That is what we call it as the excess depreciation that we go ahead and transfer. The transfer of surplus that I'm talking about. Okay. So, but once I apply revaluation to a particular asset, the similar asset involved in that class should also be revalued. For example, I have a factory and I have a administrative building. Ma'am, both are building. Can I apply revaluation for both of them? No. I have a factory and it is an administrative block. The activities happens in an administrative block is different from activities happens in factory. But मेरे पास like 10 factories हैं. Then all the factories I have to go ahead and revalue if I revalue one factory. That is what? The entire class. If one asset in a class is revalued, then all the assets in the same class must be revalued to ensure consistency. So we have to apply this. What? We have to apply the consistency on this part. Now, ma'am, do we go ahead and revalue every single year? Not required. The frequency of revaluation is totally dependent on what? The frequency of revaluation is totally dependent on the asset type. Matlab, I can do every 6 months once. I can do 6 years once. I can do 3 years once. It depends. I can do every year also. That is totally depending on what? Depending on the asset. Right? So this is what the whole IAS 16 property, plant and equipment till the revaluation part. However, we have an impairment to be covered, IAS 23 borrowing cost to be covered, and we also have decommissioning cost to be covered. But there are a few people who is making an argument saying that there are non-depreciation for PPE. Sometimes the asset is well maintained, depreciation is not required. Or let's say building. I've kept on telling about building. Sometimes क्या होता है, like what happens? sometimes the building will be of more of the residual value of the building is greater than the carrying amount. उस time क्या होता है, like there is no point in depreciating क्योंकि negative depreciation आएगा. Correct. So there are situations where people say like let's not depreciate too. Right? Yeah. So all of the assets, whenever we have a standard, it's our job to go ahead and disclose certain things. Now what I'm going to do, the IAS 16 PPE mein, whatever comes, I'm going to put it where it goes to. Either it goes to P&L or financial position, and what makes some changes. Okay. Let's say property, plant and equipment. What are the effects that you can expect to have, guys? The first thing that you can expect to have is depreciation. Where do you think depreciation will go to? Statement of P&L in the name of expenses. Property, plant and equipment. Because of property, plant and equipment, I can expect to have depreciation, and then this depreciation will go to where? Will go to statement of P&L in the name of expenses. First thing. Second, if the same property, plant and equipment gets impaired, then this impairment loss will also go to statement of P&L in the name of expenses. Correct? Yeah. If there is any kind of revaluation surplus, this goes to where? This goes to other comprehensive income in the name of equity. Where does equity goes to? Statement of financial position once again. If there is a revaluation loss, then this revaluation loss can either go to other comprehensive income or it can also go to statement of P&L depending whether we have a balance in other comprehensive income or not. Correct? Depending any kind of what? Depending whether any kind of balance is available or not. Okay. Then apart from this, carrying amount of property, plant and equipment will also go to statement of financial position under the name called asset side. Right? Carrying amount of statement of financial position is the one of the key important factor in your statement of financial position under asset side. In statement of financial position under asset, under non-current asset, the first element will be written in the name called what? Will be written as property, plant and equipment. This is the overview of what? Overview of property, plant and equipment. Okay. So now regarding this IAS 16 PPE, I'm going to take all the doubts that you guys have, that you can post it on the comment. When will I start consolidation? Sooner. Yeah, you can write PPE. Agar if you're writing, if you're preparing single entity statements and वक्त नहीं है, then you can keep it as PPE. But I will always tell you to put the full form. But time is not there. PPE लिख दो, कुछ problem नहीं है. Yeah, okay, great. Let's move to the next standard. We call it as what? We call it as IAS 40 investment property. So once you understand IAS 16 PPE, IAS 40 is going to be the easiest part. It will not have much additions at all. So what do we need to know? We need to know what is the IAS 40 investment property. All of us have this confusion about IAS 40 investment property. Okay, so again, every standard will have what? Will have its own process, like recognition and measurement, initial measurement, subsequent measurement, derecognition, everything as it is. Okay, IAS 40 investment property. This is what we're gonna learn. Now start with the very first point. We need to know what is recognition criteria, people. See, any asset, if it has to meet, any asset, if you have to bring. Now all the standards I'm talking is all about assets. Property, plant and equipment, investment property, intangibles, or else, government grants, whatsoever it is, before it have to come to that particular standard, it should meet with the definition of asset. What is the definition of an asset, guys? Two things. One, it should be probable that future economic benefits are generated from the asset. Second, the cost can be measured reliably. This is very, very important. I mean, jo bhi paisa, I'll keep it on the asset. That amount, will I be able to reliably measure? That we call it as what? That we call it as recognition criteria. Correct. But however, just because it's an asset, I can't bring into 40. Because I also have property, plant and equipment now. Can I also put it in PPE? Yes. So for that to be specific, I should know what is investment property. So what is investment property? Guys, investment property could be a land or building. It could be a land or building which is properly or purely there to earn rental income, which is there to earn only rental income for capital appreciation rather than the use in the business or in the ordinary sale of business. For example, understand, I have a house, okay, or I have a property, keep this as property. So this property is used to earn rentals. It will go to IAS 40. It is kept just like that. I don't have any purpose. Undetermined purpose. I mean, पता ही नहीं क्या करना है. Undetermined purpose. Or else, you have kept it for capital appreciation. मतलब, let it there रहने दो. Like after a particular number of years, maybe the value of the asset might go up. We call it as IAS 40. Okay. But what if this property is used in business? Then I will consider that as 16 PPE. What if this property is held for ordinary course में sale of business? Then it is IAS 2 inventory. So when do you think it is considered as investment property? When it is kept to earn rentals or the purpose is undetermined completely. I mean, pata hi nahi kya karna hai, like, or else it is kept to earn some economic benefits, or it is kept, or it is kept to earn some capital appreciation. Then I can keep it as what? IAS 40 investment property. So once the recognition criteria are satisfied, what we can do, we can go ahead and consider the next part, that initial measurement. So guys, exactly ditto how we learned initial measurement of property, plant and equipment. Same thing. There is no change in it. There is not even a single bit that gets changed when it comes to initial measurement. But only thing is, do you see, an investment property is a land or building is what I have told. If it is a land or building, it is most likely used as what? I mean, it is most likely self-constructed rather it is being purchased. The initial measurement will exactly be same as what? Will exactly be same as your IAS 40 investment property. Yeah. So initial measurement is going to be exactly same as IAS 40, IAS 16 property, plant and equipment. Only thing is, if you have self-constructed asset, you don't have anything called purchase price. So rather you have what? You have self-constructed cost. What could be the cost? Direct material. Matlab, you can take bricks, cement, right? Direct material, bricks, cement, or else all other equipments that you're using. Yeah, now you can expect to have direct labor, like people who are there to construct your building, correct? Or you can expect to have production and non-production overheads, right? These are the things that you can expect to have if you're self-constructing the same asset. So purchase price, if I purchase it from a direct builder, then purchase price will come. Or if I self-construct, direct material, direct labor, production and non-production overheads. So that is what the initial measurement that we can expect to have. Okay. Once the initial measurement is done, it's our job to understand how the subsequent measurement works. The subsequent measurement of your IAS 16 property, plant and equipment was based on what model? Was based on cost and revaluation model. But here you have subsequent measurement, cost and what model? Subsequent measurement is, you have two model, that is cost model. Another one is fair value model. Now what is cost model? We take the historic cost. As usual, I'll go reduce accumulated depreciation. I'll reduce any impairment loss. But in fair value model now, I will take the opening balance of the asset or the historic cost of the asset and I'll find out fair value. Okay, any difference between these two is sent to statement of P&L account. Any difference in these two will be sent to statement of P&L account. It could be a gain or it could be a loss. Now, it's our prime understanding that we should know what is the difference between fair value model and revaluation model. See, fair value model and revaluation model. And revaluation model. What happens in fair value model? Here, both are based on fair value measurement. Revaluation is also based on fair value measurement. Fair value model is also based on fair value measurement. Okay. But this fair value, whatever we have, it is the frequency of fair value model is required every year. Every year you have to apply. But here it is not necessary every year. You can go ahead and apply as and when required. As and when required. But here it should be what? It should be every single year. And after revaluation, we used to calculate depreciation on revalued amount. We used to find out the depreciation on revalued amount. Here no depreciation. Increase or decrease was sent to other comprehensive income. Here increase or decrease will send to statement of P&L account. But the one common thing is, if you apply fair value model, then all the investment property should be applied fair value model. Here also, if you apply revaluation model to one asset, then all the class of the asset should be applied what? Applied to the revaluation model. That is a basic difference between what? Fair value model and revaluation model. So now this fair value model is applied only to what? It is only applied on the investment property. Right? It is not applied on what? It is not applied on your property, plant and equipment at all. Okay. However, the major portion that you can expect to have in investment property and property, plant and equipment is there could be a chance of what? transfer between PPE to investment property. If there is a transfer between PPE to investment property or from investment property to PPE, then what happens? This is what you need to know. Okay, understand first it is being transferred from PPE to investment property. Let's say on 1st January 20x1, I have the value of asset. On 1st January 20x1, I have the value of asset and the value of the asset is $10,000 with the remaining estimated useful life being 10 years. Okay, I would like to transfer exactly on 30th June 20x1. I would like to transfer exactly on when? Exactly on 30th June 20x1. If that happens, first of all, if I go transfer to PPE, now people will ask, ma'am, क्यों transfer करना है? Guys, if the purpose changes, it will get transferred. मतलब I was using for my own use. So my own use मतलब business use के लिए it was held under property, plant and equipment. From here on, if I want to rent out to another person, I will be treating it as what? I will be treating this as investment property anymore. Correct? So when the purpose change, we have also should transfer from property to PPE to investment property or vice versa. Now, this case, what happens? Whenever I make a transfer, it's your job to find out fair value. So it's your job to go ahead and find out what? It's your job to go ahead and find out the fair value. So when you find out the fair value, let's assume on this date the fair value is $13,000. Of course, from here on it will be treated as investment property. There is no doubt about it. But what happens for this 6 months? I will now have to find out what is the carrying amount on the date of transfer. What is the carrying amount on the date of transfer? I would go calculate furthermore depreciation for 6 more months. That will be of 500. My carrying amount is 9,500. But what is my market value? What is my fair value? My fair value is $13,000. So this $3,000, $3,500, I do not give it to investment property because this increase happened when the asset was held under IAS 16 property, plant and equipment. I treat this as revaluation surplus. I treat this as what? Revaluation surplus. But once I make a transfer, uske baad like kuch hua, like I mean some changes happen. Let's say my year ending is 31st December 20x1. On this date we found out the fair value and this fair value is $12,000. I mean after that there is a decrease of 1,000. This $1,000 is not my headache. It goes to statement of P&L back then. Yeah, so this $1,000 is not my headache. It goes to statement of P&L after, because once I transfer you to the investment property, it is not my headache. My headache is not at all there. This is from property, plant and equipment to investment property. What happens? You can do vice versa treatment, that is investment property to property, plant and equipment too. Okay, so what happens at that point of time? I can take investment property to what? Investment property to PPE. I take the same example. On 1st January 20x1, I have the asset with the carrying amount of how much? Carrying amount of $10,000. Okay, estimated useful life of 10 years. But it was held, I was given out on a rental to somebody. But somewhere on 30th June, I decided let me go ahead and use it for my self-use. I want to transfer from here onwards. It's going to be what? From here onwards, IAS 16 property, plant and equipment. Now, what will I do? Again, it's my job to go ahead and find out carrying amount. Guys, don't do any kind of depreciation. The carrying amount will still be $10,000. It's your job to go find out the fair value. The fair value will be 13,000 as we discussed in the previous example. Now this jo bhi increase hai, whatever the increase of $3,000 will have to be sent to statement of P&L account in the name of fair value gain, not loss, not OCI, because this is the increase which has happened when the asset is kept under what? The asset is kept under the fair value method, not under investment property, not under PPE. Then once I transfer, when you move to 31st December X1, it's your job to go ahead and find out what? Depreciation for 6 more months, because once you transfer to PPE, you keep it under either cost model or revaluation model. There is no way that you can keep it under any model which is not having a depreciation. Either cost, depreciation, fair value, revaluation model, depreciation. You have to go charge depreciation based on what amount? This is the transfer amount. I go charge depreciation 13,000 divided by 10, 9.5 years. Why 9.5 years? On this date, we have done with 6 months. The remaining useful life will only be 10 minus 0.5 years. The remaining useful life only be 9.5 years. And what will be the depreciation that we can expect to have? The depreciation that we can expect to have is 13,000 divided by 9.5 shall give you somewhere around 1,368. This into 6 by 12, you go ahead and find out the depreciation for the 6 months period. That will be of how much? That will be of 1,368. 684, I'll go reduce depreciation, and baki ka amount will be your carrying amount on 31st December X7. That is how we go ahead and calculate the transfer from where? Transfer from investment property to IAS 16 property, plant and equipment. So I shall give you guys a theoretical notes for this. That is about your IAS 40 investment property. Now I'm open for the questions on IAS 40 investment property. Whatever you guys have questions, you can go ahead and ask. Vaibhav, there will be a depreciation, but the depreciation is depending on whether you're keeping it on cost model or fair value model. If you're keeping it at cost model, then there will be a depreciation. If you're keeping it at fair value model, then there won't be any kind of depreciation. Yeah. Okay. Okay. I'll move to the next part, that is IAS 36 intangibles, guys. Tangible assets. Okay, we're going to learn on what and all we're going to learn on IAS 38. We're going to learn how does the initial measurement works, recognition works, and internally generated ko kya hoga, and measurement, subsequent measurement. We're going to learn this. This is a slight part where people get a little confused about it. Okay, so understand. Before I get in anything, you guys need to understand the word called identifiable. See, identifiable matlab two things has to come. The word identifiability comes with two things. One, is it separable? Matlab, can it be sold without selling the business? Without selling the business. We call it as what? We call it as identifiable. For example, if somebody tells goodwill, I will not say it is identifiable because it is not separable. Can you sell goodwill alone without selling a business? Not possible. But sometimes you can also get identifiability because of contractual rights. Matlab, I have a right to use your brand to run the business. We call it as franchise. This comes from what? This comes from agreements. This comes from agreements or outright purchase. Outright purchase, matlab I go purchase a patent from somebody, I go purchase a copyright from somebody, I get on an agreement with you to use your brand in the name of franchisee. We call it as what? We call it as contractual rights. So the identifiability comes with two different words. That is, one is separable, that is, can you sell an asset without selling the whole business? Then it is separable in nature, identifiable in nature, and it is contractual right will it be able to come? That we call it as what? That we call it as identifiable. First thing. Then we don't know the difference between monetary and non-monetary assets. What is monetary and what is non-monetary? Where monetary is all about contractual right to receive money or contractual right to pay money. Contractual right to receive cash or any asset that is potentially favorable to us, or you can say contract to right to receive money for now. We call it as monetary. Now, if I take the word intangible, it is non-monetary in nature. Why it is non-monetary? My patent doesn't promise I will give you so much. My patent tells you you can use this and you can earn more economic benefits. My property, plant and equipment will not promise me that I will give you so much, but it will promise me to earn more economic benefits, maybe by producing more goods, or I can have a truck which can be used in the logistics, I can have plant and machinery which can be used in factory for manufacturing. These are all non-monetary. Then ma'am, what could be monetary? For example, receivables could be monetary. It is a contractual right. I gave an invoice to a person and they agreed that they will pay to me. It is only payment. Investment in shares, investment in debt, any investments, it's a right, I will get back the amount I have invested on. Correct. We call it as monetary assets. So if I talk about intangible asset, we say it is non-monetary asset. So if I have to say an intangible asset in one line, I would say intangible asset is nothing but an identifiable non-monetary asset without any physical substance. What is an intangible asset is called as? An intangible asset is an identifiable non-monetary asset without any physical substance. We call it as what? We call it as intangible asset. What is an asset? Which is controlled by a past event and from which I can generate future economic benefits. So if you understand this, I can tell you what is the recognition criteria for intangible asset. What is the recognition criteria? Very simple. It should meet with the definition of an asset. What is the definition of an asset, guys? Probable that future economic benefits. The same thing what you learn for property, plant and equipment and investment property. And it should also meet with the definition of intangibles that you can see above. Ma'am, just because it deals with, just because it meets with the definition of an asset, can I go recognize that as my intangible? Bilkul no. The problem is, There are multiple types of intangibles which we don't know. What are the different types of intangibles? You can say intangibles can be considered in multiple types. One, it could be internally generated. It could be internally generated, or it could also be purchased, acquired outside. So in acquisition, you can acquire through business combination, or you can go acquire through separately. Business combination or separately. See, what could be internally generated intangibles? Goodwill, brand. Yeah, I'm open for your answers. You can come up all of that. You can tell me what are the internally generated assets maybe. I'm waiting for your answers. Maybe you can bring it on. No answers. Goodwill. Good. Okay. See, goodwill brand. See, this word goodwill, na, it is very commonly used. The reason why internally generated cannot be recognized, not recognized in intangible. Kyuki, you tell me how much amount you have invested in goodwill and brand. It is very wisely used. It's very wisely used. What is wisely used? See, the goodwill comes from because my customer satisfied with the product. How much have I spent in the customer satisfaction? Very difficult to find out. Goodwill came because of my staff behavior, the way that they handle. How much I have spent amount on my staff behavior, I don't know. Right? It's very difficult to measure the amount which is reliable for the goodwill generation or the brand value or the customer loyalty. Yes, sir, it's a asset, but it is internally generated. Unfortunately, I'll not be able to recognize Kyuki. I don't know how much cost I have incurred on this specifically. Okay, but kuch separately I go ahead and acquire. For example, patent I purchased, copyrights I purchased, software I purchased, yeah, license I went and purchased. These things are coming from what? These things are coming from a name called contractual right. Outright purchase it is. I have a right. I made a purchase and my cost can be incurred, measured reliably. I go consider that as my intangibles. But these are not supposed to be treated as intangibles. Sometimes what do we do? When I acquire a business, I don't just acquire the business, I also acquire the brand of the other business. We call it as what? We call it as purchased goodwill, which we will go ahead and learn in where? We will learn in business combination, that is consolidation. But can I recognize? Yes, I can recognize. Nobody is stopping. I can go ahead and recognize what? I can go ahead and recognize internally generated or acquired separately. I can go ahead and recognize acquired separately or a business combination, not internally generated. But there is one asset which can get internally generated and still eligible to get considered as intangible. We call that as research and development. So in research and development, I always divide this research and development into two different phases. What are the two different phases? One is research phase, another one is development phase. All I have to worry is, can I generate economic benefits? Am I sure that I will be able to generate economic benefits is what you have to ask a question for. In research phase, it is always a baby phase where there is no guarantee about what? No guarantee about generating economic benefits. No guarantee about generating economic benefits. Yeah, but development phase chances are there. इसीलिए I will go consider. Yeah, chances are there. Research phase are always sent to statement of P&L as expenses. Sent to statement of P&L as expenses. Okay, but development phase, if you meet a criteria called pirate, I can go treat you as what? Intangibles. Now, what is this pirate criteria? What is this pirate criteria? Guys, it is a mnemonic. We have like overall 6 criteria to be considered. It is there for you to help for. See, pirate criteria means like, can you generate probable future economic benefits? I mean, like with the amount that you have spent on a development, for example, maybe I'm developing an COVID vaccine. So will I be able to, am I in that stage where I can generate probable economic future benefits on this particular vaccine? Yes. Then maybe one criteria is satisfied. Second, I is identifiable. No, it is intentional. Do you have intention to complete? Do you have intention to complete? You have intention to complete the project. Oh yeah, I think I'll get you the newer one. Yeah. Probable future economic benefits. Do you have intention to complete the project? Second thing. So that means, as a company, have you done this project as very serious, or is it just like for the sake of doing? Maybe sometimes government tells you to do and you're doing. That shouldn't be there. You have an intention to complete the project. Plus, resource should be available. See, if I'm gonna go creating or developing a vaccine, end of the day I should be able to have what? I should have all the relevant resources like lab, and I should have staff, financial resources should be there to complete the project so that I can sell the vaccine in the future. And as an organization, do we have an ability, because of the external factors like political factors, economical factors, would you be able to take care of all of that and then get the project into the life? I mean, can you bring into the commercial production? Then we can go ahead and recognize. Do you have all enough technical facility? Like, do you have lab? Do you have the relevant APIs that you need to use for the vaccine innovation? That you have? Yes. Then the expenditure should be able to measure reliably. Whatever amount that you're spending on this development, can you keep an account on it? If these criteria are satisfied, internally generated research and development can be recognized as intangible asset. That is the recognition criteria for what? Recognition criteria for your intangible asset. Okay. But however, when I come to initial measurement, this is exactly same as what? This is exactly same as your IAS 16 property, plant and equipment. Initial measurement as same as what? IAS 16 PPE. But one thing is, you can't expect to have many directly attributable costs are eliminated here. Many directly attributable cost are eliminated. For example, installation cost. What will you install in patent? What will you install in copyright? Transportation cost. What will you assemble? Yeah, all of this can be eliminated here. That is same purchase price, same IAS 23 borrowing cost, and if you have anything directly attributable, maybe directly attributable cost here could be legal cost. Yeah, some registering fees could be expected in what? Expected in your intangible asset. But other than that, I don't think so. Yeah. So once you know the initial measurement, you should also know subsequent measurement. The subsequent measurement is all about cost model and revaluation model. Now, do I have the same thing? Yes, guys, same thing. Cost model and revaluation model as IAS 16 PPE. But one change you can expect to have, instead of depreciation, we will have what? Instead of depreciation, we will have amortization. Now, ma'am, what is amortization? Only the word gets changed, rest all is same. There we used to debit depreciation and credit accumulated depreciation. Here debit amortization and credit accumulated amortization. One thing that you can expect to have is here mostly straight line method. Because it's very difficult to find out the pattern of what? It's very difficult to find out the pattern of what? Pattern of a intangible asset to say with should I follow return on value method? No, like it is based on mesh. No, guys, it is mostly straight line method. And until there is a guaranteed buyer, until there is a guaranteed buyer, residual value is also residual value will believe to be 0. Correct. That could be another point that we can expect to have in amortization. So how do you calculate amortization? Amortization is calculate cost minus residual value, most likely 0, and estimated useful life. Now the problem is about estimated useful life. Now, what is the most of the intangibles will have no estimate or no definite useful life. Why no definite useful life? Can somebody tell me what is the useful life of a software? I mean, we are using Zoom. How many years do you think we can use Zoom? How many years we can use Zoom? It's very difficult, right? The number of years that I'll be using Zoom is very difficult to analyze. At that point of time, if I don't know what is the definite useful life of an asset, how do I go ahead and charge amortization? Us time, if there is no definite useful life, then no amortization. If there is no amortization, then what do you have to do? Instead, please conduct impairment review. Conduct impairment review. See if the asset value has gone down or not. Every year you go make a review. That we call it as what? That we call it as impairment review. Agar there is no estimated useful life, please go ahead and find out what? Please go ahead and find out any impairment is happening. Every year you have to go ahead and conduct. Right? This is what happens in the name of amortization. But IAS 38 is not done yet. You also have a small changes called revaluation. As I've told, revaluation model is applied based on fair value. Abhi we discussed that, fair value is based on active market. And active market is based on identical asset. This is what I have told. So now if you think, if I bring you a particular software and I tell you find out the similar product, see, I can't say identical, but close to similar, so I can find it. But there are a lot of intangibles which are not having a similar assets. For example, take per se patent. Okay, what is patent ka similar assets? Like I have a patent to I have made a patent for a particular type of engine. Now you tell me, can I find a similar patent to find out the fair value? It's very difficult, isn't it? It is very difficult to get the fair value of lot of intangibles. Why? Because they are unique in nature. Most of the intangibles are very unique in nature because brands, customer list, like internally developed technology, these are all very unique. So when there is no active market, your IAS 38 requires fair value to be based on what? Based on active market. For most intangibles, active market itself do not exist. It is very rare. Prices are not publicly available. If it is, you can't observe the prices. It's very difficult to find out the prices. The valuation always goes wrong. So when you don't have this, you can, instead of using revaluation method, you can go ahead and use what? You can go ahead and use cost model. Right? That is what the additional point you have to know. So IAS 38, it's very difficult to do what? It's very difficult to go ahead and find out the fair value for most of the intangibles because it is unique in nature. And you shall go ahead and use what? You shall go ahead and use cost model in that kind of scenarios. Right? So that is the subsequent measurement. Now, all of these assets, that is IAS 16, PPE, IAS 40, investment property, IAS 38, intangibles. If you have to go ahead and derecognize them, what will you do? Let's say you want to go ahead and dispose them. There is a disposal. Then what will you guys be doing? If there is a disposal, you have to find out whether there is a profit or loss on disposal. How do you know? Very simple. You take the sales proceeds and you minus the carrying amount of the asset. Whatever the value that you get, if it is positive, you can get either profit. If it is negative, you can get a loss. This goes to statement of P&L account. This is the calculation part. Section A or B may you might get some 2 marks questions, right? So we go ahead and apply this method. So I don't think so accounting treatment will be asked, but if they ask accounting treatment, let's take an asset. It could be a property, plant and equipment, investment property, or else the intangibles जो भी है. Let's say I'm giving you a value, cost is $10,000 and accumulated depreciation so far is $6,000 and sold for $5,800. Guys, it's very easy to calculate. How do you calculate? Mera proceeds is 5,800. My carrying amount is how much? Carrying amount is $4,000. You can say directly, ma'am, 1,800 is my profit. Calculation is easy. But accounting treatment mein kya karna hai? First go ahead and derecognize the asset. How do you derecognize? You go debit, disposal account with $10,000 and you'll go credit the asset, and now the asset has to be eliminated from your books of accounts, 10,000. Then go ahead and cancel accumulated depreciation. Accumulated depreciation will have credit balance. To cancel, you might have to go ahead and debit it. Debit accumulated depreciation with $6,000. You'll go credit what? You'll go credit the disposal account with 6,000. And for the sales proceeds, what will you do? Debit cash at bank because money will come into your picture, 5,800, and you'll once again go credit disposal account. Now what have you done in your disposal account? Open a ledger account of disposal account. It is not necessary, but you should know. What happens? First you have gone ahead and debited disposal with asset. Write it. To asset, $10,000. Second, you have gone ahead and credited disposal with accumulated depreciation. By accumulated depreciation, $6,000. Then you have gone ahead and again credited disposal with 5,800. Credited by cash 5,800. Right? Close the balance, 11,800. 11,800. The baki amount will be sent to statement of P&L account to 1,800. So this is nothing but profit on sale of non-current asset. If it is on the credit side, then it is profit on sale, loss on sale of non-current asset. See here, the credit balance is higher. Balance is higher. Hence, that the balance is going to statement of P&L as profit. So this is what typically your derecognition happens. Is every standard requires you to disclose certain information. It is important to know those disclosures, but not so important in your FR exam that they will ask a question on disclosures, because they have a lot of other terms to go ahead and ask a question on. Okay, now what shall we do? I have completed the IAS 38 too. You guys have to bring on if you have any questions. If you have any kind of questions. So if you guys don't have any questions, I'm waiting for your questions, but if you don't have any questions, we can take a quick 15 minutes break and come back to continue with borrowing cost and impairment, and then we shall go to leases, financial instruments, and then we can go to provision, income taxes. The major standards will be covered in the marathon. Okay. Yes, Prithvi. Yeah, I told your name. Thank you. Okay. Guys, all the questions I'm going to answer once I come back from the break. Let's take a break for 15 minutes. Yeah. Come back by 7 p.m. I believe we are back from the break. Let's get into the next standard called your IAS 23 borrowing cost. Now, what is this IAS 23 borrowing cost? See, in all of the initial measurement, we had something called what? We had something called borrowing cost. Now, this borrowing cost can simply be told as interest or finance cost that we pay on loans. Finance cost that we pay on loans. Now, whenever I purchase a non-current asset, it could be property, plant and equipment, or it could be investment property, or it could be intangibles. Any loan that I have taken to develop this, and if you pay any interest, can I go ahead and capitalize or not? Can I consider this interest as asset or expense? This is what you have to find out. Now, this time you need to understand not all the assets are eligible to get the interest to be capitalized. There are only few assets which are eligible. In that, what is qualifying asset? That asset which takes substantial period of time to get constructed or to get ready for the intended use. It takes a necessary period of time. For example, I want to build a train. It is not available tomorrow, guys. Like, you have to wait for a while until it gets constructed, until it gets made, right? So let's say I need an aircraft, it will take some time. A building, it will take some time. It is not readily available. But if I want a vehicle, maybe it is available immediately within a week or 10 days or maximum a month. I'll be able to get the vehicle. So if any asset that will take a necessary period of time, substantial necessary period of time to get itself constructed, we call it as qualifying asset. And that asset is eligible to capitalize what? Capitalize interest. But the problem is, do we go ahead and capitalize the interest for the entire useful life of the asset? Definitely no. Right? Definitely no. But I will be going ahead and considering what? Considering capitalized interest for that construction period. That period of time it gets constructed, that time I can go ahead and capitalize. For example, you have three process that you need to understand. One is commencement. Suspension, and cessation. Commencement, suspension, and cessation. Okay. So what is commencement? Start of capitalization. When will I start? First, you have to see, do you have the interest? Do you have the loan that you have incurred? I mean, has the loan incurred? Did you take the loan from the bank? Yes. Okay. Hold on, don't start the capitalization. See whether the necessary activities of the asset has started or not. Started. If not, see, if I am self-constructing, maybe is my architect coming to the site, or people are there starting to do the foundation, or at least are we getting the site permission, like planning permission from the government office? These are all the necessary activities that I might be doing. Okay. But sometimes what happens, I might get a asset from another person. That means, have you incurred any expenditure has been incurred or not? Did you pay any kind of money or not? So if these things are there, I can go ahead and start capitalizing my finance cost, start capitalizing my interest. That means, I'll say today I got a loan. 15 days ke baad we started the activities. 15 days ke baad only I will go ahead and start capitalizing the interest. That is commencement of interest, commencement of capitalizing the interest. Similarly, we also have something called suspension. What is the suspension? That I will temporarily stop capitalizing. What is temporarily stop capitalizing the interest? That means maybe because there is a workforce strike is happening, people are not constructing, or let's say if I tell you go construct in Kashmir during the winter season, it's very difficult because it is going to be a heavy snowfall. It's not possible to construct any building or any kind of plant and machinery. Let's say there is a war happening with a neighborhood country, right? And my construction plant is there in the neighborhood country. It is very difficult. At that point of time, I'll stop capitalizing because the asset is also not getting built. You will also stop capitalizing the interest, instead send it to statement of P&L account, right? And when will you stop the session? When the asset is ready for intended use. I mean, I wanted to build the asset. I built the asset, then I will stop capitalizing. So whatever I have capitalized in this process, that is the interest which will go to your what? That is the interest which will go to your statement of financial position along with the asset. Yeah, that is the value of what? That is the value of interest that goes to statement of financial position along with your asset. Now, you can have two different types of loan facility. What are the two different types of loan facility? Sometimes you have a specific borrowing. Sometimes you have a specific borrowing. Sometimes you have general borrowing. If you have specific borrowing, what you have to do, you have to go ahead and consider with a specific borrowing, you need to consider the rate of interest should be considered by the bank loan. But whenever there is a specific borrowing, sometimes what happens, unutilized loan are invested in short term deposit. Invested in where? Invested in short term deposits. At that point of time, it's your job to go ahead and reduce whatever the investment income you get from that investment deposit. For example, let's say I have 10 million loan that I got and I pay interest of 10% and the asset took 12 months to get constructed. Okay, so I will go capitalize. Let's assume no suspension in between. Like from January I started, December I stopped. So I shall have to consider 1 million as my interest that is eligible to get capitalized. But somewhere 6 months, I have not used 3 million of amount. This 3 million was invested for 6 months. 3 million was invested for 6 months. Let me erase it so that you guys will not get 6 months ke liye we have gone ahead and invested 3 million at a surplus of 8%. That means I will get a return of how much? Return of 8%. Then what do you think you should do? You should go ahead and reduce this from the 1 million, because with the same amount you are capitalizing the interest, same amount you have also earned the income. It's your job to go ahead and reduce 3 million into 8% into 6 by 12. That should be $120,000 has to be reduced. So I will say 1 million minus 120, only the remaining value is eligible to what? Eligible to be capitalized, that is $880,000. But if you have general borrowings in the business, you have many borrowings, it's your job to go ahead and calculate weighted average cost of capital for the capitalization process. Weighted average cost of capital. At that point of time, there is no concept of investment surplus because it is not a specific borrowing. How do you calculate weighted average cost of capital? You can take per se, I'm just taking a small example for you guys to understand. I have 1 million, I'm paying an interest of 10%. It could be from loan note. I might have bank loan, 5 million, paying an interest of 8%. I might also have, let's say, overdraft or not overdraft, you can say debentures, which is having a loan value of 8 million and paying an interest of 12%. What will you do? You can do two things. Okay. What is the total value that you have? Total value you have 1, 5, 6 plus 8, 14 million ke liye. How much interest are you paying? You're paying $100,000 and 5 million into 8% will be of how much? 400, and 8 million into 12% will be of how much? 960. 400, then 960. So in total, I'm paying an interest of how much? In total, I'm paying an interest of 100 plus 400 plus 960. Together, I'm paying an interest of 1,460,000 interest for 14 million. What is my average interest that I can consider? Average interest I can consider is 1,460,000 divided by 14 million into 100. I shall expect to have an average interest of 10.42%. This will be my capitalization rate for general borrowing. Yeah. So this is how we go ahead and capitalize conceptually. Now, if you guys have any questions or doubts on your IAS 23 borrowing cost, you guys can go ahead and ask me. Great. Vaibhav, ma'am, will you discuss a single entity question? This is going to be a complete conceptual marathon. Okay. I'm going to conduct a pre-mock session that is going to happen in the next week. So for March, there is always an ACCA which releases pre-mock, right? That session will be conducted in the upcoming week, where you can expect to have a full-fledged, like whatever the section C question comes, I shall be able to solve that there. Very nice question. During the period, the suspension from the suspension period में अगर कुछ income भी आया, that is also I will not go ahead and reduce it. Very nice question. Sometimes what happens? See, suspension period में I will have interest which is going to statement of P&L as expenses, isn't it? Same time, suspension period में if you have got any kind of investment income, I will not go reduce from my capitalization. Rather, this investment income goes to statement of P&L as income. Very nice question. I don't reduce because I don't capitalize anything. There is no any other questions. I have added the theory of your IAS 23 borrowing cost. I shall move to the next standard, IAS 36 impairment of assets. So IAS 36 impairment of assets. So all of you guys need to understand the word impairment. Impairment is nothing but reduction in the value of the asset. Now, ma'am, people would have said depreciation is reduction in the value of an asset. You are telling impairment is the value reduction in the value of the asset. Depreciation is actually what? Depreciation is actually the matching concept. Like I go ahead and use whatever the amount that I spent on an asset should be transferred to statement of P&L because I'm using that in the business to run the business, so I have to treat it. I'm converting that as into expenses. But this impairment now, it is happening because of external and internal factors, right? So I would say impairment is in the reduction in the value of the asset. That means if an asset is not able to recover its carrying amount, we call it as what? We call it as impairment loss. That means if your carrying amount exceeds your recoverable amount, we call it as what? We call it as impairment loss. That means, ma'am, what if my recoverable amount is greater than my carrying amount? Do nothing, guys. It could be treated as revaluation surplus, right? So now it's very important for you to understand recoverable amount matlab kya hai. Like we know carrying amount, original cost minus accumulated depreciation. But what is recoverable amount? Recoverable amount, see, take per se. Let's normally talk. Assume you have a cycle. Okay. So this cycle, or not, let's keep bike. Bike is easy. Let me use this. Assume it is a bike. It is a bike, by the way. Okay, this bike, I have two options. I have two options. One, I can ride Rapido on this and earn, let's say 1 lakh per year. If not, I sell today and get 4 lakhs. Good bike I have. Okay, don't say, ma'am, 4 lakhs, who will pay for a bike? Like I have a very good bike. 1 lakh per year for the next 4 years. Now, what will you do? Will you sell the bike or will you use the bike in the Rapido? Most of us say, ma'am, if I sell also, I'll get 4 lakhs. Yeah. If I use also, I will get 4 lakhs. Can I just go ahead and sell it off? Yes. See, you can make a decision that way. But you need to understand, or else you can say, ma'am, I think bike, if I use for Rapido, I can also use for self use. So that means I might keep it. No, you don't decide the factor that way. What will you do? You will go find out. See, you're getting 1 lakh per year in the future terms. Let's say if you calculate present value of that, maybe you will earn less than that. Assume that it is going to be only 3 lakh and 40,000. I'm just keeping a rough figure. Okay. Now, would you like to keep the asset in today's value for 3 lakh 40, or would you like to sell the asset at 4 lakhs of today's value? Which is better to me? Selling an asset is better to me. That means the highest value that I can recover from the asset is highest of two things. One, value in use. What is value in use? Present value of all future cash flows. What is value in use? Value in use is present value of all future cash flows. Second one, I call it as fair value less cost of disposal. Because guys, if I sell the bike for 4 lakhs today, people might not purchase it for 4 lakhs. They might purchase it for 4 lakhs, but there will be a middleman who got me a client. I have to pay a commission to him. I might have to pay legal cost because the ownership of the bike is getting transferred to the opposite person. It's my job to reduce all the cost of disposal. In dono mein, whichever is the highest value, that I call it as my recoverable amount of bike. Now let's assume my recoverable amount of the bike is 4 lakhs, but in my books of accounts, I kept the same bike at a carrying amount of 4 lakh 50,000. What will I do? Array, I am keeping 50,000 extra than what a market can give me. It's my job to consider impairment loss at that point of time, $50,000 or 50,000 rupees. So if I have to talk about impairment loss is nothing but if my carrying amount is greater than what? If my carrying amount is greater than recoverable amount, I shall have to go ahead and consider that as what? Consider that as impairment loss. What is recoverable amount? Highest of two values, that is value in use and what? And the fair value less cost of disposal. Cost of disposal could be incidental cost, incremental cost, it could be commissions, legal charges, transportation, something which is incurred because you're selling the asset. We call it as what? We call it as cost of disposal. Okay. Now, ma'am, you're telling we will have to go consider impairment loss. What is the accounting treatment of impairment loss? You go debit the impairment loss which goes to statement of P&L account, and you'll go credit what? You'll go credit the asset value. That is reduces the asset value. So after the reduction of the asset value, kya hoga? We have to calculate the depreciation. Now, depreciation will be calculated on what value? Calculated on impaired value. That means after calculating the impairment loss, जो भी value will be there, I will calculate depreciation on impaired value with the remaining useful life. For this concept, we call it as what? We call it as change in accounting estimate. So if you have read IAS 8, this is one of the part of it. Change in accounting estimates are always accounted prospectively. Matlab, abhi se I will make changes. From now on, I will go ahead and make changes. I will not go back and say like, okay, I will reduce my cost to the carrying amount. No, I will go ahead and say now the carrying amount is, let's say, 4 lakh from now on, or I will charge depreciation on 4 lakh from the remaining useful life of the asset. Remaining return on value percentage, remaining machine hour number of units that I can expect to have. That is what I do on the depreciation part after I go ahead and calculate what? After I go ahead and calculate the overall value. Okay. So once I understand the impairment loss, most of us will say like, ma'am, how do you get to know the asset is getting impaired or not? For that, you always have something called impairment indicators. This impairment indicators could be of two sources. The impairment indicators comes from external source as well as internal source. Let me talk about external source. Guys, if you calculate present value, in the calculation of present value, if you have high rate of interest, less present value, less rate of interest, high present value, more present value. Now, in the future, if the market is moving, and suddenly there is an increase in the rate of interest, what do you think you can expect to have? Abhi, my value in use of an asset can go down, which can go down than the carrying amount. There is a chance of impairment. This is one impairment indicator in external source. Okay. Otherwise, in the market, my shares are trading at very less value than my book value. Market shares are trading at lesser value than book value. So that means like I will not be able, if my shareholder sells their share, I am telling them you'll get at least $8, but in the market only people are trading at $6. That means there is a loss of $2 every share. My net assets will also have the same proportion of loss. It is an indicator for me to have a check what is the recoverable amount of all of my assets. That is the second external source of indicator. Apart from this, you can also expect to have, sometimes what happens, the asset value decreases more than expected in the market because of customer preference, customer changes, customer taste, technological improvements can all come into the picture and say that it is more than what you expected. Okay. Or passage of time, normal of use. This is one thing. Sometimes what happens, guys, there could be some changes. These changes could be your external factors. Matlab, what are the external factors that you can expect to have? Political factors or technological factors. See, if I have a I'm into plastic based industry. Now everybody started using very economical in nature. I mean, like they're against the plastic. They want to be sustainable in the market. Now all my plant and machinery might not be so great having an outside value because people stop buying which is based on the plastic, which is based on the metal, which is against the environmental change. Now what happens? The value of the asset goes down. This is one indicator which shows there is a chance where there is an impairment of your assets. Likewise, we have 4 external sources which I discussed. 3 are internal. What are internal? Sometimes the asset goes damaged, guys. Like there is a chance where the asset got damaged. You might not get expected to have the same value what you expect. Or else, we also do that, right? We order sometimes a product in Amazon. You think the asset will perform far better. But after a point, that asset is not performing well only. Correct? What happens at that point of time? You'll go ahead and feel like a rate is not performing well. The value might not be the same. So that is another internal indication. Or else kya hota hai? Like management is taking such a decision which can affect that particular asset. adversely. Matlab, like I've been using textile industry, I have a manufacturing unit which can manufacture the fabric. Now that I want to shift to electronic based industry, that manufacturing unit of a textile, the fabric is no more going to useful for me. I might have to sell, the value might go down, right? Yeah, which we call it as what? Which we call it as internal source of indication of impairment. Now these are all the two sources. What is impairment loss? Carrying amount going on top, like it exceeds your recoverable amount. If not, what happens? If not, the highest value would take the recoverable amount. Yeah, that could be value in use or fair value less cost of disposal. In dono mein you take the highest value, and then you see whether it is lesser than carrying amount, whether your carrying amount is greater. If that is the case, you can treat it as what? You can treat it as impairment loss. You recognize impairment loss. How do you recognize impairment loss? With the multiple source of indicators, that is external and internal source of indicators. Once you find out the source of indicator, there is a chance of impairment, there is not a chance of impairment. It is not necessary there is always a chance of impairment. Okay. Plus, after all, sometimes these indicators can reverse, or you didn't find out the indication properly. Okay. At that point of time, what happens? You might have to go ahead and reverse the impairment. You might have to go ahead and reversal of impairment. What is the reversal of impairment that you can expect to have, people? For example, future may, whatever the estimation that you did said that impairment is a loss. Now there can a chance where you can go ahead and do a reversal of impairment. But however, whenever you do a reversal of impairment, you have a ceiling limit, and that ceiling limit is nothing but carrying amount of the asset. Carrying amount of the asset if no impairment is done. Now I'm going to take you guys one practical example for you to understand this part, what I have written here. Okay. What happens? Let's take an asset. Yeah. Taking a normal value. So let's say no impairment. Recoverable amount. Let's keep that way. Iska matlab, let's say I have an asset of $10,000 with an estimated useful life of 10 years. Okay. On 1st Jan, X1 is there. Yeah. On 31st December 20x3, that is x1, x2, x3, 3 years ke baad, my carrying amount was $7,000. What happened? On this date, I found out the recoverable amount is $5,000, or let's keep $3,500. Now what happened? You went and reduced to what? You have went and reduced a impairment loss. 7,000 was the carrying amount. You have reduced an impairment loss of 3,500. Impaired value is how much? Impaired value is $3,500. Fair enough. Okay. Then what has happened? On 31st December 20x5, that is after 2 years, you would have charged on this date. What is your estimated useful life? 7 years your estimated useful life. You would have charged a depreciation for 2 years ke liye. That means your carrying amount on this date is 2,500. On this date, you find out a recoverable amount is now how much? Now it is around 6,500. You'll say, ma'am, I made a mistake. Let me go ahead and reverse it. Can I go ahead and reverse? Reversal. Can I consider? 2,500 minus 6,500. Can I take 4,000? No. What do you have to do? You have to find out ceiling limit. If no impairment was done, what is the carrying amount of the asset on this date? It would have been after 5 years. X1, X2, X3, X4, X5. The carrying amount would have been 5,000. This acts like a ceiling limit. The maximum that you can go ahead and come back is only 2500 to 5000. The reversal 4000 is not possible. You can only reverse 2500. Say you can brought back to $5,000. That means how much is the reversal you can expect to have? 2500. A credit entry can go to statement of P&L, not more than that. Definitely not more than that. That's how the reversal of impairment works. What if usse kam tha? Like what if it was just 4500? Then that much, no problem. The maximum is the ceiling limit that you have to keep it in a mind. Yeah. So till here, it's a normal impairment loss. Okay. Then you guys have something called CGU. What is this? We call it as cash generating unit, which we say the smallest group of identifiable asset, which we call it as what? Smallest group of identifiable asset, which is independent on nature, which can generate its own cash flow. Now what do we have to do? Agar kuch impairment hua on this, impairment loss, agar there is a impairment loss, then what happens on this impairment loss? How do we allocate? The allocation is something that you need to know. Okay. Okay, CGU could be another company also. For example, if Tata acquires Ford company, that company Ford can be a CGU to Tata, because without Tata's intervention, they shall be able to make more number of, I mean, they will be able to make a generate a cash outflows or inflows without any intervention of Tata. Then we call it a CGU. Now, agar Ford company ke liye kuch impairment loss हुआ, then how do I allocate? Should always see if one company acquires another company, can I expect to have a purchased goodwill be there? I said yes. In intangible asset, purchased goodwill could be a part of the CGU always. If this is the case, how do you allocate impairment loss? Always see for specifications. Matlab, do you see any specific asset got impaired? Then go ahead and allocate impairment loss on that. Second, take complete goodwill till the end to get allocated. If the goodwill is also not enough, then go ahead and allocate impairment. No impairment loss on current assets. We don't allocate impairment loss on what? On current assets. And the last bit that we can expect to have is what? The last bit is allocate remaining based on proportionate basis. You can write this down, it might help you. Based on proportionate basis. Okay, I'll take a small example for you to understand this CGU. But this is one of the ACCA study hub question. So the carrying amount of the net assets of single cash generating unit are given. We have PPE, allocated goodwill, product patent, net current asset. So the total carrying amount is $300,000, but as a result of adverse publicity, Fingal has a recoverable amount of only $200,000. इससे वजह से what we have to do? We have to go ahead and allocate the total impairment loss of $100,000 to be allocated. यहाँ पे there is no specification, मतलब a particular plant and property, plant and equipment, they have not given information whether it is impaired or not. But all we know is what? All we know is that there is an impairment loss that I have to go allocate. The first step is specification, but there is no specification here. We don't have to worry about it. Okay. Sometimes what happens, if the specification was not given, you can go ahead and go to the step number 2. So step number 2 is what? Entire goodwill. See, I have an impairment loss of 100,000. My goodwill is 50. I will allocate the entire 50,000 on this goodwill. I will not have goodwill at all. Over. Okay. Out of 100, From 50,000 I've allocated goodwill. Remaining 50,000 has to be allocated. How do I allocate? No impairment on current assets, because all of your current assets will always be there in its current, at its best recoverable amount. Don't allocate impairment loss once again on that, please. Okay, now I have two assets: PPE with the carrying amount of $200,000, product patent with the carrying amount of $20,000. I will go allocate based on the proportionate of what? PPE and product patent. I will take $50,000 will be allocated on PPE like this way: 50,000 into 200 upon 220. Patent will be 50,000 into 20 upon 220. Okay, that shall give you how much? That shall give you a value of, I will go ahead and consider 45,455. That is $200,000 may 45,455. And here I will go allocate how much? I will go allocate 4,545. That shall give you the carrying amount of PPE how much? 154,545. And product patent will be 15,455. Together plus your current assets should give you the total value of how much? Total value of $200,000. This is how I will go ahead and consider what? I will go consider that as IAS 36 entire impairment assets, impairment loss of CGU. Yeah, so this is what, when I say impairment review on your intangible assets, this is what I'm typically saying about impairment review. Now, any questions till now? I'm all open. Yeah. Good evening, Deepak. I'm open for all of the questions, guys. After this standard, we're done with 6 standards. After this, we can get into leases, financial instruments. Guys, any questions? Okay. We shall go to the next standard called. We shall go to the next standard called IFRS 16 leases. IFRS 16 leases. Now we think IFRS 16 leases is one standard where we all think it is difficult to go. First of all, in leases, we need to understand in the lease contract what happens. See, lease contract, I say it is a contract if I have 3 elements. First, do I have identifiable asset? Matlab, nobody will come and say, I have given you an asset today, you can use it, but give it to me back when I want it. No, there is something called, you will always have a lease term. What is that lease term? A particular period of time. There is an identifiable asset where you as a lessee will direct the use of the asset. Nobody will substitute this. Will direct the use of an asset. Nobody will substitute this. That we call it as what? That we call it as lease contract for a exchange of consideration. Should have these three elements to call it as what? Call it as lease contract. What do you need? You need an identifiable asset where you should be the one. You should have lessee will direct the use of the asset. We call it as what? Right to control the asset. Correct? For in exchange of what? Exchange of consideration. Whenever the lease contract is there, you can see two elements are coming into the picture. What are the two elements coming into the picture? One, I have a liability to pay, which we call it as lease liability. Okay. Another one, I have a right to use asset. I have two things coming into the picture. One is lease liability, because I have to make a payment every year, every month. I have to go ahead and make a payment. We call it as what? We call it as lease liability. The another one, we call it as right to use the asset. If you guys remember the definition of an asset is a present economic resource which is controlled by an entity. I've never said an entity should own the asset. It is always what? It is always an asset should be controlled by an entity. Controlled by an entity to generate economic benefits. Now, whenever I lease an asset, I do control to generate economic benefits. That is the reason when I have lease term or lease contract, I shall go ahead and consider that as what? I shall go ahead and consider that as right to use asset. Plus now I should also create something called lease liability. Now to keep it simple, this is nothing but purchase of control on credit. Purchase of control on an asset, yeah, on credit terms. This credit should be paid in installments. You have to keep it in mind. Paid in installments. Okay. So how do we recognize our lease liability and how do we recognize our right to use asset? Is lease liability के लिए we have initial measurement, and that initial measurement is recognized. Initial measurement is recognized by present value of future lease payments. Present value of future lease payments are called as what? Are called as your initial measurement of lease liability. Now, how do we calculate present value of future lease payments? I'll take the cash flows multiplied with the discounting factor. Cash flows multiplied with discounting factors. Yeah. So this is initial measurement of what? Measurement of lease liability. The same lease liability has a subsequent measurement. We call it as what? We call it as amortized cost. How is this amortized cost works? It is not amortization, guys. It is amortized cost. How does this amortized cost works? It depends on two different methods of making a payment. I mean, if you make a payment in advance and payment in arrears, this is what you need to understand. Payment in advance and payment in arrears. If you have payment in advance, you will have opening balance, yeah, and you reduce the cash payments, that is lease payments, plus finance cost. You shall get what? You shall get the closing balance. But whenever there is an arrears, you'll take opening balance, you will first add finance cost, then reduce lease payments. This is what you need to know first. Now I shall take a proper example for you guys to understand this. You guys can see this question. The Delta entered into a contract to lease an asset on 1st Jan exide and the lease commenced on that date. The lease requires 6 annual payments of $2,000 with the first payment on 31st December exide. That means payments are bilkul happening at the year end. Okay, and we have incurred a further $1,000 in installation cost. I'll come back to the same question when we do right to use asset. Now, Delta will return the asset to the lessor at the end of year 6 and the initial measurement of the lease liability has been calculated at 8710. The initial measurement is calculated. What will I do? I will go take 8710. Now, if it is payment in arrears, I will go add finance cost. Now, the finance cost is added at what rate? Effective rate of interest 10%. I go add my finance cost 871 and deduct my lease payments to be how much? $2,000. In year 1 my closing balance you can expect to have is how much? In year 1 my closing balance that you can expect to have is 7581. And you do the same thing for year 2. 7581 is the opening balance of year 2 plus you add finance cost, that is 758, and you minus $2,000. That shall give you guys a closing balance of how much? Closing balance of 6339. Do the same thing for third year. 6339 you add, that becomes 640 minus 2000, and that shall give you guys a closing balance of how much? Closing balance of 4973. Right, 4973 is your opening balance. You add finance cost of 497, you deduct $2,000. That shall give you a closing balance of how much, guys? 3470. Right, yeah. And then see, this was year 1, year 2, year 3, year 4. Talking about year 5 now. 3470 is your opening balance. Add 347 minus 2000. Your closing balance shall be somewhere close to 1817. Sixth year, 1817. To add the balancing figure, 183 is your finance cost minus 2000. You shall have a closing balance 0. Ma'am, it is not 183, it should be 182. It's okay. Here and there, $1 is fine. Here and there, $10,000 is fine because of decimal symbol that we shall have it. This is how amortized cost of what? Payment in arrears works. Right, this is how the amortized cost of what? Payment in arrears works. Now here, as a accountant, you should know this is my closing balance of lease liability. I'm not saying no to that. But in that, how much is current liability, how much is non-current liability, something that we should know properly. How much is current liability out of this? 7,851. You see, what is next year has not settled. That becomes your non-current liability. 6339 will becomes your non-current liability. And Baki amount will becomes your current liability. That is 787581 minus 6339. The remaining value, that will be 1242, will become your current liability. This is current and this is non-current. This is how it happens for what? Happens for payment in arrears. But however, if I have to talk about payment in advance, it's going to be completely vice versa. Let me take a small example for that too. Delta entered into a contract to lease an asset on 1st July 20X8. The lease requires 5 annual payments of $30,000 with the first payment on 1st July X8. Okay, we will incur. Don't worry about the installation cost. Will come back when there is a right to use asset. And Delta will return the asset to the lessor at the end of year 5. No problem. The initial measurement of the lease liability has been calculated at 91,119, which is the present value of remaining 4 payments discounted at the annual interest rate. Guys, you need to understand payment in advance. I will have opening balance. I reduce lease payments first. Correct. Then I'll get a balance. On that, I add finance cost at, here it is 12%, should give me closing balance. Correct. I'm going to do 1 or 2 years for payment in advance. Understand. My opening balance should have been including the first year payment of 55-year payments, right? The first year should have also been included. That is of how much? That is of $30,000. Something minus $30,000 should have been a balance of 91,119. That means my opening balance should have been how much? 121,119. But they have directly given the balance after deducting the first payment. You can add the finance cost here at how much? At 12% on 91,119. That will be how much? That will be of, yep, that will be of how much? That will be of 467 9 double 9 into 12%. I shall get 10,934. So my closing balance for year 1 will be how much? My closing balance will be for year 1 9,119 plus 12%. It shall give 102,053. Okay. Opening balance is 102,053, and then once again you reduce the 30,000, then only you will add finance cost. I mean, on this you will reduce what? You will reduce 30,000. Your balance shall come somewhere around 72,053. On this you will add what? On this you will add finance cost of 12%. That will be of how much? That will be of 8646. 8646. Your closing balance will be of how much? Your closing balance will be of 80,000, approximately 80,700, and it goes on for the 5 good years. Now what you have to do here, when the payment in advance is there, you need to understand, guys, if my closing balance is 102,053, in this my current liability this time will not be the difference, but rather the immediate payment that I do, that becomes my current liability. And the baki amount of this becomes what? Non-current liability. This is what? Very, very important. 72,053. That becomes what? That becomes my non-current liability. Okay. So payment in advance, payment in arrears. Very, very important. Okay. After this, what happens to right to use asset? Ma'am, this is how lease liability works. Initial measurement, subsequent measurement, payment in advance, payment in arrears. But what happened to right to use asset? Right to use asset will have an initial measurement. Right to use asset will have initial measurement. How does the initial measurement works? Lease liability. I take lease liability plus any direct cost, plus any kind of direct cost, plus any decommissioning cost. This will become what? This will become your right to use asset. What is this decommissioning cost? We will learn in IAS 37. But lease liability value plus direct cost. What is direct cost? Directly attributable cost. So it is my asset, right? It is not only what I'm supposed to pay, whatever I have paid also, I have to include in what? I have to include in the asset value. Correct? Yeah. Lease liability plus direct cost plus decommissioning cost, if I have to go ahead and consider. Now, if this is the initial measurement, what is my subsequent measurement? Guys, you need to understand. This is my initial measurement. What is my subsequent measurement? The subsequent measurement is completely dependent on what? Completely dependent on what kind of use that you're going to use. See, if you have an asset and that asset is used for production or supply of goods and services, then IAS 16 PPE. If you have taken an asset, you have taken a building, and that building is now given on a sub renting purpose, then you can use IAS 40 investment property. Let's say you have patent and you have leased patent, or you have license and you have leased license from somebody, then according to IAS 38 intangibles. Okay, but however, yeah, however, whatsoever it is, it could be a subsequent measurement, it could be IAS 16 PPE 40 or 38, doesn't matter. Whatever it is, depreciation though, we need to understand how do we calculate. Most likely it is IAS 16 PPE for your FR syllabus. How do we calculate depreciation? See, for right to use asset, guys, you are not purchasing the asset. You just have a right to use the asset for a period of time. And that period of time is nothing but lease term. Now, do I have to calculate depreciation on lease term, or do I have to calculate the depreciation on estimated useful life of the asset? It depends. The depreciation should be calculated based on the transfer of ownership. I mean, if you have a transfer of ownership at the end of the lease term, transfer of ownership at the end of lease term, if that is happening, if that is an yes, then you have to take estimated useful life of the asset only, not the lease term. The asset, not the lease term. Okay, but if it is a no, then it could be a lease term or useful life, whichever is lower. Whichever is lower. Okay, that is how I go calculate depreciation on right to use asset, because whichever you take, at ultimately you have to consider what? Ultimately you might have to go ahead and consider the value accordingly, right? So this is basically what? This is basically the right to use asset ka part. If you go ahead and consider this question only, like payment in arrears ka question I'm taking, what is the opening balance of your lease liability? It was 8710, plus you have an installation cost. Your right to use asset will be 9710, depreciated over the lease term. How many years? 6 years. I will go ahead and charge depreciation, because it is not given any kind of what? Any kind of value. So you can go ahead and consider the depreciation to be for how many years? 6 years. 1618 will be your depreciation every single year. Your depreciation. So that is how right to use asset works. If I go to this question, what is your opening balance? Your opening balance was 121119. Correct, yeah, okay. Plus we have 10,000 of installation cost. The right to use asset would be 132, sorry, 1,130,119 will be depreciated for 5 years. That's how we calculate the subsequent measurement of right to use asset. This is between the normal lease liability. Yeah, normal lease liability. Sometimes what happens, guys, we might also have all of this to be exempted. All of this, whatever I'm talking, no, all of this to be exempted. We can apply something called lease exemptions. We can apply something called lease exemptions, which I don't do all of this. Instead, whatever the lease payments I make, whatever the lease payments I do, this will be treated as expenses in your statement of P&L. This will be treated as what? This will be treated as expenses to your statement of P&L account. When this lease exemption happens in two scenarios. What are the two scenarios? If there is a short-term lease, if there is a short-term lease, or if the lease value is under value asset. If it is a short-term lease or if it is a under value asset. We call it as what? We call that as lease exemption. Short-term lease, if the lease term is less than 12 months, you can treat it as what? You can treat it as expenses. Under value asset, when the asset is brand new, when the asset is new, the value is less than $500,000, sorry, less than $5,000, then we call it as what? Then we call it as lease exemption. Okay, this we call it as what? Short-term lease or under value lease. Based on that, we can go ahead and apply lease exemption. Whatever amount you pay, you can go and send it to P&L. But one condition on under value asset is this should not be majorly dependent to generate cash. Majorly dependent to generate cash. That is there? Yes, why not? That is there. Why not? Right? That is still lease exemption. Yeah, the last part of your leases is about sale and leaseback, people. Now, what is this sale and leaseback? Sometimes what I do, this I treat it as an option, to raise finance. What do? I do as an option to what? As an option to raise finance. What is it? Sometimes what I do, I tell a person I might not have enough money. I will not be able to, let's say, I don't have any options of raising finance in the business. I have an asset. No, I will sell it and lease it back, because if I need to use the asset, all I need is a right to use the asset, not the ownership. Correct. What will I do? I sell the asset. When I sell, I will have a profit which is relevant to both ownership and control. Ownership and control. But when I buy back, when I'm purchasing back, what am I purchasing back? I'm purchasing back only control. See, I'm selling what? I'm selling ownership and control, but I'm buying back only control. Again, understand. Selling ownership and control, buying back only control. So this will lead to what? This will lead to you recognizing profit between ownership and control is not appropriate, because you never sold control. The control was never sold. Only ownership got sold. You can recognize profit only related to ownership, not related to control. You can recognize only related to what? Only related to ownership, not related to control. Why? Because you have never sold the control. You sold and you bought it back. It's my job to find out how much is the value of my profit. For that, I'm going to take you an example. Let's say I have a carrying amount of an asset is $600,000, and I have fair value for this is a fair value or sales proceeds. You can use the fair value, or you can also call it as sales proceeds. For this is $700,000. Okay, so I got a profit. If I sell, the profit is $100,000, and this profit is belonging to both ownership and control. Okay, and let's assume I leased back and my lease liability value is, let's assume, $550,000. Okay, now this $100,000 is an ownership which is belonging to both ownership and control, but it's my job to go ahead and eliminate what? It's my job to go ahead and eliminate the part of control ka profit, because I've never sold the control. For this, what should I do? Find out the profit, how much is attributable to control, how much is the profit attributable to ownership. How do we do it, ma'am? Very simple. Guys, take the fair value. Take the fair values. The fair value of ownership and control both is $700,000, because I sold it to a person. Yeah, which made a profit of how much? Which made a profit of $100,000. Correct. Do I know fair value of control alone? Do I know fair value of control alone? Yes. Am I not leasing it back? My lease liability is nothing but the fair value of control alone. If I have a profit of 100,000 for both ownership and control, can I not find out what is the profit for control alone by doing a cross multiplication? I can do by taking what? If 100 is for 700, how much profit is for $550,000? You can go ahead and cross multiply, and you shall get a profit of how much? Profit of 78.5. That is 78,570. This is the profit relevant to control. But I should recognize only what belongs to ownership. Ownership profit will be nothing but 100 minus 78,570. 100 minus 78,570. My profit, which is attributable to how much? 100 minus 78.57. It should be 21,430 is what the profit which is related to ownership. Only this goes to statement of P&L. You're not supposed to recognize this $100,000 irrespective. That is what sale and lease back may it happens. Similarly, guys, when I lease back, I also have what? I also have right to use asset. Now it is vice versa treatment you have to do. So, like the way how carrying amount was there, the carrying amount of this information, this example was $600,000, where the fair value of ownership and control was how much? 700. Now apply the same concept. This is for both ownership and control. Apply the same concept. For control, I have a fair value of $550,000, which I call it as lease liability. How much would be the carrying amount, which I call it as right to use asset? How much would be the carrying amount, which I call it as what? Which I call it as right to use asset. How do we do? 550,000, again do the cross multiplication, into 600 divided by 700. You shall get a value of $471,430. This will be the value of right to use asset. Only in sale and lease back you can expect to have what? So only in sale and lease back you can expect to have the right to use asset value would be lesser than the lease liability. These are all the adjustments that you can expect to have in sale and lease back. Now, till IFRS 16 leases, please go ahead and tell me, guys, if you guys have any kind of questions, any doubts, you can put it on what? You can put it on the comment box. I'm open for it. Now I'll answer all the questions for 3 minutes. मैम ACCA का कोर्स में क्या क्या होता है? Okay, see, you will have all the skill, knowledge, and professional level papers. Like, you'll have in total 13 papers. Right now it is 13, but expected to change in the future. Depends on which qualification you have completed. I would suggest you to contact the number which is there on the group. Like you can see there is a number which is there here. Any ACCA query, see I have put it on the chat. You can contact this number. They should be able to help you in a far better manner. So provision and contingents, yes, we will do that. Yeah. So we can do one more standard and then we can go for a break. After that, we can come back and do the remaining sessions and we can wrap it up. So the next standard that I would like to go is, let's keep it simple. Or do you guys want a break and then go for it? I can do accordingly. But yes, I think we have done what? Intangibles, borrowing cost, and then only leases. So I'm going to keep the simple standard called IFRS 15 revenue. In revenue from contracts with customers. No break. IFRS revenue contract with customers. So what does the standard says? This standard has a 5-step model. What is this 5-step model that they have? So I can go ahead and recognize revenue only if these things satisfies. What are these things satisfies? First, you have to go ahead and identify what? Identify performance obligation. Sorry, you have to go identify the contract first. I mean, what is a contract? A contract is a agreement between two parties which talks about rights and obligations. Like, I have a right to give you amount and you have a obligation to give me goods or services. You identify the contract. Once you identify the contract, identify the performance obligation. I mean, what are the obligations that we have? How much obligations we have to perform in this? That you go ahead and consider that part. Identify contract and identify the performance obligation. Okay. Then you have to go determine the transaction price. Determine the transaction price for, see, purchase consideration is not transaction price. You have to understand what is the transaction price for the whole contract, and after that you will allocate the transaction price to each performance obligation. Each performance obligation, ultimately you'll go recognize revenue only when the performance obligation is satisfied. Revenue once PO is satisfied. Now, most of all, us, we have a problem in allocating transaction price or in understanding how the performance obligation gets satisfied. The performance obligation can be, what is performance obligation? I, as a seller, have an obligation to perform to get my revenue in my books of accounts. We call it as performance obligation. This is typically providing goods or services to the customer. Providing what? Goods or services to customers. That we call it as what? That we call it as performance obligation. Now, this could be different in nature, multiple in nature. There are a lot of different performance obligation that we can expect to have. So it's your job. If a contract has multiple performance obligation, you'll have one transaction price. You have to allocate between each other. What do you have to do? You have to go ahead and allocate between each other. How do you allocate between each other? You'll go ahead and allocate based on proportionate method. For example, I take a small example for us to understand. Jackson as a company enters into a contract with a customer to transfer a software license and perform installation and provide software updates and technical support for 5 years in exchange for $240,000. Okay. Now, Jackson has determined that each good or service is a separate performance obligation. Okay, license, installation, update, and technical support, all of them they'll sell separately. It is not one each other. See, for example, if I tell you that I will give you maintenance service, you can't say I will provide staff separately and cleaning services separately. Both of them come together. You can't divide these two. Correct. But all of this can separately be sold. That means all of them are four different performance obligation. So a goods which you can sell outside for $300,000, you actually sold it for only $240,000. Right? Yeah. So you actually was able to sell it for only how much? Actually, you were able to sell it for only $240,000. Now, this $240,000 has to be allocated between these four performance obligation on a ratio of this. This is a standalone price. How do? I will take $240,000 for software license will be allocated based on 15 upon 30. $240,000 will be allocated to installation service 6 upon 30. Or you can take 150 upon 300 or 60 upon 300. That is one and the same. Software updates will be allocated of $240,000 into 4 upon 30, and technical support will be allocated $240,000 into 5 upon 30. If I do this, I will go allocate the transaction price according to what? According to the proportionate basis. How do I do the proportionate basis? 240 into 150 divided or 15 by 300. I will allocate 120 to my software license, 48 to my installation service, to my update software updates, and 40 to my technical support. If you add all of this, 240 is allocated on the proportion of standalone price. That we call it as what? Allocating transaction price. I'm talking about the fourth part. But performance obligation can be satisfied of two types. One, a performance obligation can be satisfied at a point in time. At a point in time, or over a period of time. A point in time or over a period of time. If it is at a point in time, if it is at a point in time, it is easily recognized. For example, see, software license. I give you license, job is done. I don't have to do anything else. It is at point in time. Yeah. Installation service, point in time. Software updates at a point in time. But technical support over a period. What happens? I told you I'll give you technical support for 5 years. I will recognize 120 as revenue, 48 as revenue, 32 as revenue, but unfortunately, this 40 has to be split over 5 years. Why? Because the performance obligation is satisfied over a period of time. Until unless you're satisfied with the performance obligation, you cannot treat it as what? You cannot treat it as revenue. This is a problem when there is a bigger aspects. What is that bigger aspects? Yeah. What is the bigger aspects that you can expect to have? The bigger aspect will be of when your performance obligation takes much time. See, take per se there is a road construction happening. So assume there is a road construction happening. L&T has signed a contract with government to construct a road. And this road will take some time to get constructed, isn't it? Yeah, I will construct, let's say 100 kilometers first, then 150 kilometers later, then just 50 kilometers. It happens like this for a period of time. Let's say 5 years is the contract. And the project is 1000 crores. Now, what happens at this point of time? A company can't wait for the entire 5 years to recognize the whole consideration. Rather, what do? They will go ahead and consider few things. What are the few things that you can expect to have? I will see. I will go keep raising invoices every year. Invoices every year. And I will recognize revenue based on two methods. What are the two methods? One is input method, another one is output method. What is input? based on the cost incurred till date, or based on the work completed till date, I will go recognize revenue. Based on the cost incurred till date, or based on the work completed till date, I will go recognize what? I will go recognize the revenue. Now the point is, now the point is, see, let's understand. A company has sent an invoice to me, or I told I will be constructing 1000 kilometers, and I have constructed 200 kilometers, and the project value is 10 million unquote. That's what we think. Okay, for 200 kilometers I am supposed to recognize revenue, supposed to recognize revenue for 200 kilometers, supposed to recognize revenue 2 million. But the point is, I will see and go check whether the invoice that I have generated to my customer is actually 1.5 million only. That means my revenue should have been 2 million, but you have generated an invoice only of how much? 1.5 million, where I make an year end adjustment saying I have a contract asset of 0.5 million. I'll have a contract asset of 0.5. What do? I go find out the contract asset of what? Contract asset of 0.5. Fair enough, people? Yeah. But what if it is vice versa? What if the invoice generated were greater? I mean, that was 2.6 million, let's say, but the revenue that you're supposed to recognize, revenue recognition, can happen only of how much? Can happen only of 2 million because of output method. See, out of 1000 kilometers I have constructed 200 kilometers. If I construct overall 1000 kilometers, they'll give me how much? They will give me a amount of 10 million. But 200 kilometers ke liye I can recognize revenue of only 2 million. That is based on what? Output method, which we call it as work completed or certified method. So now I will go recognize revenue of how much? 2 million. But if I've collected more money, or if I've asked them more money than what my revenue should have been done, then I call it as what? Then the remaining $600,000 will be treated as contract liability. I'm liable to perform an obligation $600,000 extra. I'm liable to perform an obligation $600,000 extra. That we call it as what? That we call it as contract liability. Right? That is the partial value of what? That is the partial part of your revenue. So what is 5-step model of revenue? Second, input and output method revenue recognition, where invoice is greater than the revenue recognition, contract liability. If invoice is lesser than the revenue recognition, then we call it as what? Then we call it as contract asset. That means you have performed more, but you have asked them less. That is contract asset. I expect to get more values from those people. Okay. Now what do? We shall move to the special transaction of revenue that we can expect to have. What are the special transactions that we can expect to have? We can expect to have, the first transaction is bill and hold arrangements. What is bill and hold arrangements? As I told you, you can only recognize revenue if in case you have provided the services that you have asked for, services that you've been asked for, that is when you can go ahead and recognize revenue. But however, sometimes you don't provide the service, I mean you don't give the goods to the customer, but still you treat it as what? But you still treat it as a revenue. It is scenario of bill and hold arrangement. So what happens at that point of time? So you build the asset, but you hold it with you. You build the asset, but what happens? You will be holding it with you and you will not giving it to the customer at all. We call it as what? We call that as bill and hold arrangements. Okay. So what happens in bill and hold arrangements? Even though the goods have not been given to the customer, we call it as what? We call it as bill and hold. I mean, we can consider that as revenue. But when can I recognize the revenue? Only when certain conditions are satisfied, I can go recognize that as revenue. Otherwise, I can't recognize that as revenue. What are the conditions? See, there should be a genuine commercial reason for the arrangement. For example, customer don't have space in their warehouse to keep, can keep. Yeah, and the goods must be separately identified belonging to the customer. You can't bear, so let's say I purchase a TV and I keep with them because I have an existing TV, like I'm selling it to another person. It will take some time for me to give that TV to them. I'll go purchase a newer one. It is there with my seller, and they're like, okay, any which way she will come later. Let me use it for demo. They can't do that. And if I ask them immediately, they should be able to transfer it immediately. And they should not be able to use anything for any commercial purpose apart from transferring it to me. Then we can go ahead and recognize revenue, even though the goods have not sent goods have not been sent to whom? Sent to the customer. That we call it as what? That we call it as bill and hold arrangement. That is one of the special transaction that you can expect to have. The second type of special transaction that you can see is consignment arrangement. What is consignment arrangement? Guys, when the contract will be likely to consignment, if the supplier retains control, the supplier retains control until a specific event occurs. For example, sometimes what happens, there is a dealer. Sometimes what happens, there is a dealer, and the dealer will sell to retailer. Retailer will sell to retailer. They will send to the customer. Retailer will sell to the retailers. Retailers will be selling it to whom? Selling it to the customers. Now what happens? They provide goods to them, but the goods will be sold to customer. This person is non-risk bearer. This person is non-risk bearer. We call it as what? We call it as consignment arrangement. I mean, they will directly sell to the customer. Customer will pay money, pay consideration, and that will be treated as what? That will be treated as revenue to whom? Revenue to the dealer directly. And for this job, the retailer will take certain fees or commission. We call it as what? We call it as consignment arrangements. But for retailer, this fees is treated as what? This fees is treated as revenue. For retailer, the fees is treated as what? The fees is treated as revenue. That we call it as what? That we call it as consignment arrangement. Yeah. I hope you're clear about it. Two special transactions. So we have purchase repurchase agreement that we can cover only if we are finished with financial instruments. Once we are done with the financial instruments, I can come back and do that part. However, however, what we can do, we can take a quick of 15-minute break, come back, and I shall complete the financial instruments and provisions for you guys, the major standards. Okay, and then after that, I can expect to have a pre-mock session that you can expect to have in the upcoming week. Okay, so let's take a quick break of 15 minutes and come back, people. And if any questions are there, you can post it on what? You can post it on the chat box and I shall come back and explain it to you. Okay, guys, thank you. Come back from the break. So, so what is the third special transaction that you can expect to have? We have the third special transaction. We can call it as what? Principal versus agent transaction. What is this principal versus agent transaction? The principal versus agent transaction will be considered like there is always a middleman who will make your sales on behalf of you. There's always a middleman who will make your sales on behalf of you. Who is that middleman? We call it as agent. Correct. The principal is the ultimate risk bearer. Principal is the one. For example, I can say principal is a producer of movie for your understanding, and your agent could be a theater. Your agent could be a theater. Correct. The producer of a movie holds the right of a movie. Right of a movie. That movie is an intangible asset, guys. Please understand. Theater people sells tickets. Theater people sells tickets, and this agent will earn a commission for each ticket. This is nothing but principal versus agent. For agent, the commission is revenue. For principal, gross income is your what? Principal versus agent is. What are the indicators of principal? If the entity is the one who's primarily responsible for fulfilling the contract, then I call them as what? I call them as principal. The entity is primarily responsible for fulfilling the contract. I call it as what? I call it as principal. When do I say an entity is agent? An entity is agent. I'm sorry. If the entity has inventory risk, we call it as principal. If they are the one who finalize the price, I mean, ticket price of the movie will be decided by the producers, not by the theaters. Then the producer is nothing but principal. Yeah, customer views the entity as the supplier. I know, like, this movie is done by the particular production. Call them as what? We call them as principal. Who's an agent? Agent is someone who acts in between. Like, they arrange the another party to provide the goods or services. Right? It does not control the goods or services before transfer. I mean, they do not have any kind of control of what? Control of your movie. That people will be called as what? That people will be called as your. This is what typically we call it as what? This is what typically we call it as principal versus agent concept, a third special transaction. Right. So this is about what? This is about IFRS 15, but we can do repurchase agreement as a special transaction in IFRS 15 only when we complete doing what? Only when we complete doing financial instruments. Okay. Now, we are so far done with IAS 16, IAS 40, investment. We have done with 8, is 2. We are done with borrowing. Done with IFRS 6. This. Done with IFRS 15 customer. And I think IFRS 32 measurement. Ma'am, later on, please tell the effects of IAS 16 and IFRS 15 on financial statement. Later on. I think IAS 16 is something that we have done, the effect already. IFRS 15, I can give you what happens. See, of course, revenue will go to statement of P and L now. And if you have any kind of contract asset or Contract liability will go to statement of financial position. Contract asset goes to statement of financial position. Under current assets, contract liability will go to statement of financial position. Under current assets and current liability. What else we can expect to have? We can expect to have deferred income. Sometimes if a customer pays you in advance, deferred income is treated as your liability. It could be a non-current liability too. It can also be a current liability. Fair enough. What shall we do? Guys, I'm open for any questions. If you have anything, let me know if you have any. Very great, guys. So we have covered the major standards so far. Far as 30 fair value. These are all the standards that we have covered. There are certain major standards which we will be covering in the pre-mock session along with the pre-mock when we do. So when we do a pre-mock, the pre-mock will be about your March 2026 sessions, the mock which is released by actual ACCA people. It will be of section A, section B, and I will be solving a section C question. And there is also a chance where we can solve, it could be a lengthier session at that point of time. Instead of 4 hours, it could be like 5-6 hours too. So at that point of time, I'll be adding some 2-3 standards of like which is important, like maybe income taxes, consolidation. These things will be added at that point of time, right? So now I'm open for any questions that you guys have, anything to be added in the upcoming pre-mock. Maybe we can prepare and we can add that so that it will be useful for you guys. If you guys don't have anything, then we can wrap up the session for today and I might meeting you guys in the pre-mock session. IFRS 9 financial instruments you're talking about? Yes, that will be. Okay, guys, then I take it as the end of the session for today. So we shall have the upcoming pre-mock session along with some more standards to be covered in the pre-mock session. Right? Right. I shall meet you guys in the upcoming session. Thank you so much for staying so long. And it was wonderful having a session.